Good afternoon to everyone. We welcome you on a hot Tuesday afternoon. We will start the session in the next 2 minutes' time. Please bear with us till then. All right. Thank you very much for joining us, ladies and gentlemen. It's a great moment for us both at FAI as well as at BCBA, as we are proud to launch our new educational series on GST. Everybody knows GST. It's probably one of the most infamous acts that we have. And we at FAA and BCBA decided, considering that GST is something that everybody has issues with, that we will start off with this series where every alternate month we are going to be delving, deep diving into a particular segment or an aspect of freight forwarding and customs clearance and do a deep dive into what GST means for that. Have Q&A where we will try and solve your questions in real time. We had also circulated a Google form requesting for people to come back to us with their grievances, with their doubts, and what is that ails them. Unfortunately, we've received very little response. So we hope that going forward, after the end of this session, you all will take the liberty of giving us more questions and more of your doubts. Having said that, our session today, what we are kicking off today's series, is going to be purely on freight forwarding. And here we are going to cover GST for imports and exports, air and sea, everything that is related to freight forwarding. Customs clearance, warehousing, transportation are modules that have been planned for the later months. And we hope that you will stick around with us like you have for all our other series. Without much ado, may I please request our chairman of FAI, Amit Bhau, to please say a few words.
Thank you, Chaitali, and welcome to all the participants of this webinar. Uh, it is the endeavor of FAI to host this knowledge series on important topics concerning our fraternity for dissemination of information, knowledge, and even skills. GST, as you are aware, was introduced in 2017 by the government, and ever since its introduction, there are a lot of queries, there are a lot of doubts, and there are a lot of misunderstandings which the fraternity has regarding the GST laws and its enactments, its provisions, and other sections. So we thought it deemed it fit that we should start our GST series as a part of our knowledge series. This series is being co-hosted by FAA and DCBA, which is from primary member of the federation. And I would thank the president of BCBA and the entire managing committee team to co-host this webinar for us. Uh, I would we have with today an expert on GST, Mr. Sunil Gabawala from Messrs. Gabawala and Company Chartered Accountants. He will dwell into the various aspects of GST, and I'm sure as we go along, lot of your queries, lot of your doubts, a lot of your questions will be answered. After the session, there is a Q&A where you can ask questions in the chat box or otherwise. And I'm sure there'll be a lot for you to take home. And even after this session, if any assistance is required from either FAA or BCBA towards this GST, we will be more than happy to assist you. Thank you so much and welcome again for this webinar. Over to you, Chetan.
Thank you very much, Amit Bhau. And I have to say thank you to both Amit Bhau as well as Sanjeev sir for agreeing to host this very important series. And most importantly to Sunil Bhai, whom I have the pleasure and honor of introducing in a short time, is because he's an extremely busy man and he's also one of the most sought after authorities when it comes to GST. So Sunil Bhai, a very warm welcome to our fraternity. And you're already a part of the fraternity, but this is an official welcome to both the BCBA as well as the Triple FAI family. So, on behalf of everyone, welcome here. Now, may I please request our president of BCBA, Sanjeev sir, to say a few words. Sanjeev sir.
Thank you, Chaitali, and a very good afternoon to everyone. Welcome to all the participants for this joint webinar. Friends, today's fast-changing rules, GST is key for freight forwarding, and be it for domestic or international shipments and multimode operations, it affects everything we do. Compliance is what keeps us safe, and smart moves boosts our efficiency. So that is why we are here today with Mr. Sunil Gabawala, an expert on the topic who would be sharing real insights and fixes for your daily challenges. So let us join in, ask questions, and let's all master GST together. Thank you, and let's get started, Chaitali.
Thank you, Sanjeev sir. And before I introduce Sunil Bhai and we start off with the session, one last would be Rama sir, because it would be completely unfair without hearing from him. For everyone, Rama sir needs absolutely no introduction. He is our past chairman of Triple FAI as well as on the board of advisors. Rama sir, two lines from you. It's your blessings. We can't start without your blessings.
Ramaji, you're on mute, I think. Not audible.
I think he has some audio issues, I think, Ramasas.
Yeah, I think Chaitali, we can get started. Okay.
Let's start the program, yeah. We value time of Sunil.
We can't hear you,
Sorry,
Chaitali.
sorry. All right. And with this, now I have the great pleasure and privilege of introducing Sunil Bhai. Mr. Sunil Gabawala is a chartered accountant in practice with third rank at an all India level. He's a cost accountant. He has an excellent academic record. Starting his career in the field of sales tax practice, he helped clients transition from the sales tax regime to the VAT regime. As a logical extension, he diversified into service tax practice. His comprehensive treatise on service tax, published by the Bharat Law House, saw 23 editions. He has also written books on international taxation. At the time of introduction of GST in 2017, Mr. Sunil was actively involved in the policy formation process as a member of the study group constituted by the Maharashtra government for implementing GST. He continues to share this knowledge on his evolving domain, and he also has a YouTube channel. Mr. Sunil has delivered lectures on topics of professional interest at various industry and trade bodies. He is a NASIN accredited trainer and regularly conducts training sessions for department officers. In his early days of professional career, he also taught tax concepts to management students at NMIMS. He's written several articles in various professional and business journals and is regularly sought after for his quotes in newspapers on indirect tax issues. He was the past president of the Bombay Chartered Accountants Society and is the immediate past chairman of the Indirect Tax Committee and the current chairman of the Journal Committee of the State Society. He is the editor of the BCAG, a monthly publication. And with that, we now hand over the mic to Mr. Sunil for carrying it forward. So, Sunil bhai, the floor is yours.
Thank you, Chaitali. It's always a pleasure to speak to industry forums and knowing that we have more than around 180 participants. It's really encouraging and it also indicates the importance of the topic which we have chosen for the day. and the controversy surrounding that. Just to share the small anecdote, you referred to the hot Tuesday afternoon. Perhaps that hot is somewhat resembling the hot and the heat which is generated by the entire indirect tax legislation vis-a-vis the freight forwarding sector. And this is why the topic today is decoding GST for the freight forwarding industry. And all the office bearers also talked about the controversies around GST to some extent. Uh, it is important to understand that the bedrock of this entire litigation is not really GST. It started way back in service tax, maybe around 2003-4, when there was an entry called business auxiliary services under the service tax law. And ever since that entry being there, the freight forwarding industry has seen lots of sleepless nights, exaggerated show cause notices, fighting the battle all the way to the courts. And of course, we are aware that even the Supreme Court had to intervene in quite a few cases to hold that freight forwarders are not merely agents and they don't merely charge commissions. They are actually trading in a freight on a principal to principal basis. However, that scar of that entire litigation and the pain in the service tax regime unluckily has continued in the GST regime. So while we would focus on the GST regime, some of the principles which we will discuss will also come from the established jurisprudence which was available in the service tax regime, and I'll keep on referring to some of those facets as we move into our presentation. I would now share my presentation and maybe we can set the ball rolling onto the topic for the day. And as Chaitali, you rightly pointed out, for the participants, let me highlight that today we are going to primarily concentrate on a subsector of the logistics sector, which is specifically the freight forwarding industry. We are not going to talk about the many other areas. We are not going to talk about the carrier taxation. We are not going to talk about the transportation business in general, or the warehousing in general, or the clearance activities. The scope for today's discussion is, I think, in 6 broad baskets. The first basket being a broad understanding of the international transport business. I'll go very fast here, but that basic understanding may be important. Of course, all of this would be known to you much more than what I understand it, but it would still be important for setting the context for the controversies which are going to come up. Secondly, we'll discuss the role of freight forwarders, the specific sector which we are going to talk about, how that role evolves as a principal to principal business and how it impacts the characterization of the transaction. What are the issues which the department raises on this front? We will be able to understand once we understand the role of the freight forwarders. We then go into understanding the composite versus divisible supplies, because there are many charges which are levied right from the carrier and carry all the way to the end customer. And many a times when I deal with clients and they ask me whether a particular type of a charge is liable for a GST at 5% or 18%. And the answers to that, the principles of deciding that, is what we'll try to analyze when we go to the third part of the discussion today. Finally, we'll go to the freight, the historical freight taxation and different permutations and combinations with different Incoterms. How do they impact the taxability? All those facets we'll try to cover in the fourth part. Then we'll move into the changes because of the place of supply controversies, 2 specific changes relating to the destination based taxation versus the recipient based taxation, and the department show cause notices treating something as intermediary. All of that we'll try to analyze when we look at the legal provisions relating to place of supply, the controversies, and how to interpose them into our business models. And finally, we'll take cognizance of the fact that GST is a state level law, and therefore most of the organizations might have multiple GSTNs. And when you have multiple GSTNs, there are various associated challenges which come both in terms of the location from where the invoice has to be raised, especially if you are claiming refunds, where will you claim refunds? And is there something called as a cross charge, which might be required across various GSTNs of the same legal entity? And those are related issues is what we'll try to cover in the last part of the discussion. And then we'll wrap it up with a broad question and answer for the unresolved questions which are pending out of that. So let's start this long journey. The first one, of course, is about understanding the transaction structure itself. And this chart, I am sure everyone has knowing this from heart, and so not too much of discussion may be required. But just to understand the entire shipping process, it starts from the goods or the cargo at the shipper's end.
Sorry,
With a,
Sunil bhai, sorry to
sure.
interrupt, but your slide hasn't changed, Sunil bhai. You're on the
Okay.
first slide. Sorry.
Okay. Is it now moving?
Yes, it's now. So the second slide was, when you were talking, the second slide was missed out.
Okay. Is it now moving ahead and back?
Yes, it is.
Okay. So you are right now on the second slide, right?
Yes,
Agenda.
correct. Yes,
So that I already set the context, so I'll not
correct.
repeat it again. We
Fair
straight
enough.
away go to the first part of our discussion, which is international transport business
Yes,
and understanding that business in a little bit of a background. And as I was highlighting that most of us here, or rather all of us know this much better than what I know. But just to set the context, what we are saying is that yes, whenever we look at a freight or a transport business, we are essentially looking at shipping a cargo from the shipper's location all the way to the consignee's location. Most likely, this would be an international shipment, and therefore there would be a lot of activities in the interim, right from moving the shipment from the shipper's warehouse to the origin warehouse near the port, handling the port related activities at the port, also ensuring clearance, and then loading the cargo onto the vessel or on the aircraft, whatever the situation may be. Thereafter, carrying the cargo all the way to the destination, handling the activity at the destination and bringing it at the destination warehouse at the port or near the port, and thereafter ensuring the last mile transportation from the destination warehouse to the consignee location. These are the broad steps which are typically involved in a what I would say a consolidated cargo movement from one location to the other. Now, naturally, at times some parts are done by one person, some parts are done by another person, and depending on that, the industry has evolved various terminologies. The basic activity of freight might include a port-to-port movement, wherein the initial leg and the destination leg is not handled by the forwarder. It's only the responsibility of the forwarder begins only when the consignment is handed over at the origin warehouse. So there, the primary component of the charges would be the freight. Of course, there would be the origin and the destination handling charges. Now, this can be extended to say that no, I would also undertake activity all the way up to transporting the goods at the consignees end. Then naturally there is a what is we know is a port to door shipment, wherein it's now not only the freight but also the destination charges or the destination haulage which comes in into the place. Same way for door to port, you have the origin haulage coming in, not the destination haulage. And door to door, of course, is the classic example of the entire shipment happening from a turnaround time basis. So this is, I think, the broad, and of course, this might involve customs clearance both at the origin level as well as the destination level, or selectively customs clearance at one of the levels. So these are, I think, the broad activity profile which freight forwarders typically will do. Of course, clearance is a separate activity which typically a CHA would undertake. But most of the times I've seen people who are within the same group having a customs license in one of the entities and freight forwarding being done either in the same entity or through a separate entity. So therefore, while the focus today is not really customs clearance and discussion around it, a little bit about it will definitely become a part of an overlapping process as far as we are discussing the freight forwarding business. So today, when we look at the models, typically when you look at the port to port business activity, you will find that there is a carrier or a shipping line who charges freight from the origin port to the destination port. This is charged to the freight forwarder. The freight forwarder then bills these charges ahead to the shipper or the consignee depending on the arrangement of the transaction. And this is where I think when we go to the controversy, we'll come to the first controversy, that when we are looking at a freight forwarder, what exactly is the role of a freight forwarder? Is he a principal, and is he therefore in a way becoming a carrier, substituting the shipping line for himself? Or is he merely a sort of a broker who arranges a transportation between a shipping line and a shipper? A lot of controversy has happened, and we'll go into a little bit of that controversy later. But for the moment, we are going to assume that these are all transactions of principal to principal basis, and I'm more or less convinced on that factor that yes, this is a principal to principal transaction of a freight trading rather than that of a commission or a brokerage. Of course, when we are talking about this freight itself, even in a P2P arrangement, we are aware that there is an origin and destination charge component. Even the carrier itself, while raising an invoice, raises separate invoices or in the same invoice separate line items, denoting freight separately, and the origin and destination charges are generally billed separately by the carrier itself, and those are typically charged at 18%, as compared to ocean freight, which we all know is a 5% tax rate. So a point which we need to bear in mind here is even for a P2P shipment, there is typically an unbundling carried out by the carrier, the shipping line or the airline itself, wherein different line items are treated differently by the shipping line. Now, what we understand, and to a large extent that may be right, but of course subject to certain errors and omissions, is that as a freight forwarder would typically look at the charge codes of the shipping line or the airline, look at the tax rates charged by the shipping line, airline, or the carrier, and accordingly replicate those charge codes and the tax rates when it subsequently bills to the exporter or the importer, the consignee or the consigner. And to a large extent, that may be right, but that would be on a major assumption that the carrier itself has correctly classified their line items into the correct applicable tax rates, or 5% or 18%. Also, we are seeing at various places that while the carrier might be unbundling the activities as freight and incidental charges or other charges, at various places at a second level, the freight forwarder, when it enters into an agreement with the corporate, he tries to bundle it. And this type of a situation where at the first purchase side, procurement side, you have distinct line items, but at the sales side, you have a consolidated invoice, presents a separate set of its own challenges, which we need to be wary about. As we move into some of the controversies, we'll touch upon that aspect also. But here, what we are trying to say is, as a factual matrix, yes, carriers have themselves unbundled the freight and the charges separately, even though the other charges may be incidental to the freight movement. They are typically charged always separately, the origin and the destination charge. When we look at the door to port or the port to door movement, naturally there is an inland haulage which is additionally involved in this transaction, and that clearly would become a slightly distinct element of service. In most of the cases, the carrier might do it, but in many situations, this inland haulage is also handled by other service providers. So here naturally there is a distinct element of service which does come in. Now, when you look at door to door, it also involves clearance, reimbursements, and many other activities within its purview. So while we are looking at these models of activities in international freight, the key issue which comes up is bundle versus divisible contract. And this is something which the industry has evolved, and more or less this has become a settled proposition in the industry parlance. And the entire theory comes from the legal interpretation that typically when there is a bundle of services and there is one principal supply, then the incidental supplies should be given the same treatment as the principal supply. So coming back to our port to port treatment, and this has been a discussion which has plagued us ever since the service tax days. Typically, a carrier would provide a transportation service of transporting the cargo from the port to another destination port, origin port to the destination port. As a part of that activity, naturally the goods will have to be loaded on the vehicle vessel, and before loading, there will be a temporary storage at the port. There will be a little bit of clearance activity and handling at the terminal at the point of loading. It's a very strong argument to say that these origin related activities carried out at the origin port and similar activities carried out at the destination port would all be incidental to the basic activity of transportation. It's like saying if I'm transporting the goods from a factory to another location, my people will have to load that goods from the factory warehouse onto the vehicle. If that be the case, that loading activity does not determine an independent transactable transaction. And there is a theory which says that in case of such type of a composite contract, the rate of tax will be determined by the principal supply. So if we go by that pure play legal interpretation, origin and destination charges should also bear the same tax treatment like freight, which means that if you are charging 5% on ocean freight, then ideally origin and destination charges, I'm going slow slightly because this is something which is conflicting with the stated industry position. So what I'm trying to propose here is that in case the freight is liable for 5%, the origin and destination charges being incidental activities to the freight activity should also bear the same rate of 5%, and this is what the theory of composite supply would suggest. Having said so, we are all aware that the shipping lines in 2005-6 took a very conservative and a very conscious call to break up this type of a supply into multiple divisible supplies, and they said that we ourselves will define different charges, and for those different charges we will independently examine whether that is in the nature of a freight or other service, and if it is in the nature of an other service, we will not treat it as a transportation service, we will treat it as a incidental service or another service, and we will charge the normal tax rate. And therefore the industry has continued with this theory that there is no bundling of a supply, but these are divisible supplies. And all carriers, typically you will find that there are two levels of tax charges. Certain taxes where 5% is applicable because that's clearly a component of freight. It might be a basic freight, it can be some fuel surcharge, it can be, nowadays you have various other bunker adjustment charges and other components of the freight which become a part of the manifest. Those types of charges, the freight entity, the carrier would charge at 5% being a part of the ocean freight, but there would be origin and destination charges which they would treat it as so-called business support services or auxiliary services and charge 18%. Now please make a note of this aspect very well. When the carrier is unbundling the supply and saying that, look, for a particular shipment, I will charge you, let us say, 500 as freight and 50 rupees as THC, which might include all these other charges put together or under another nomenclature also. And I will charge you 5% on 500 and 18% on 50. Now comes your transaction as a freight forwarder. This is a procurement invoice which you have. Now comes your transaction as a freight forwarder when you are negotiating with your customer, the exporter. Many a times you would also want to do it in the same manner. You might want to say, I will quote you freight at 550 and I will quote you THC either at 50 or maybe at 100, whatever you want to. And you would also follow the same treatment, 5% on freight and 18% on the THC component. However, at times we have seen, and again, this practice is varying amongst the industry. At times, many freight forwarders or corporates insist that at this level, I will charge a single rate. I will either not charge separately for THC or destination or origin charges and build it in my basic freight quotation. Now, this presents its own sets of problems because moment you say that I am going to charge 1,000 rupees as a freight, I'm not going to break it up into two components, basic freight and other charges, and you have a procurement which has those two components separately, you will end up with accumulation of credit because on the procurement side, THC would be 18%. On the sales side, because the THC is not charged separately and it becomes a part of your normal ocean freight, you will be charging 5%. Therefore, you will end up with what is known as accumulation of credit. Many freight forwarders, when they look at the end of the month, they see their input credits are much larger than their output taxes. Two reasons. This is one of the reasons. Second reason is exports, which we will touch upon slightly later. Now, this accumulation then is creating a problem because there's no mechanism of getting this money back by way of a refund, and it just builds up your balance sheet, leads to your cash flow issues and other challenges. More importantly, when the department will scrutinize these types of transactions, there is a chance that the department may treat it as a bundle because there is clearly an activity of origin and destination charges happening within your consolidated charge. And the department might then say that this is an artificial bundle because the carrier had originally unbundled it and made two transactions. And moment you say it's an artificial bundle, the department might deny the 5% concessional tax rate and by either arguing that you are only a support service provider or something, they straight away deny you the 5% concessional tax rate and start demanding or raising a show cause notice to demand 18% tax instead of 5%. And we have seen quite a few show cause notices, some of them very poorly drafted, but somewhere in some of those cases we found that this confusion amongst the industry itself has led to litigation. The confusion of trying to consolidate and bundle a already unbundled activity at the carrier end, according to me, will be slightly, one has to be slightly careful about trying to take that type of a position. So that is one area, and we'll keep on revisiting this bundle versus divisible in different contexts. But I think this is a starting point which we need to bear in mind, that at least do not overturn what has been done by the carrier. As a freight forwarder, let's understand that our source of procurement, we need to respect that source of procurement. We need to respect the positions taken by the carrier, and let us not, without a lot of thought, overdo that or override the positions already taken by the carrier. Because at the carrier level, there will not be a problem. At the corporate level, there will not be a problem. But as an intermediary, as a freight forwarder, we will start facing problems on that front. So that is something which we should try to avoid. Some audit teams, especially because we are aware that GST is a state subject also. Many and as the assesses are divided amongst the state and the center. The challenge which we are seeing is many of the state tax officers have limited exposure to services, and logistics as a sector by itself is slightly intense sector in terms of the provisions and understanding. And therefore, we are also seeing that lot of litigation is coming because of a limited understanding of the state tax officers of the transaction structures. And one common dispute or allegation which is coming around is that the department tries to bundle everything together and demand 18%. One of the reasons I just highlighted, that a situation where you have a consolidated billing. But even in case of separate billings, at times the department tries to say that, look, this is actually you are undertaking a multimodal transportation. At that point of time, many a times they miss out the very specific factor that yes, I might be doing a origin transportation, I might be doing a destination transportation, and I might be doing a sea transportation in the interim. But the multimodal transport definition applies only to domestic multimodal transport operators and not to international multimodal transport operators. There is a specific proviso which says that the 18% rate or the 5% rate given for the multimodal transport operators will apply only for domestic. So for international, if at any point of time you find a department officer or someone bringing in the multimodal concept into the entire discussion of international shipment, I think we should be very clear in bringing this point to their attention so that unnecessary litigation or controversy doesn't come in. And many a times this is missed out and then it needs to needless litigation on that front. Thirdly, as a freight forwarder, the role primarily is transportation, and this we need to understand. When I'm doing transportation, there is a distinct activity of clearance which might come in, which I might do, my sister company might do, or a third party customs clearance agent might do. Now, when that is done, many a times there will be a lot of reimbursements claimed. Now, these reimbursements are very different from my role as a freight forwarder or a procurer and seller of freight. And these reimbursements, subject to the pure agent concept, we are aware, receipted, the industry knows this as receipted charges. And if they are receipted charges at actuals, but not related to my core freight forwarding activity, in that case, we treat it as pure agent and take it outside the purview of the GST network. A couple of points here. Whenever you are claiming any reimbursement and not paying tax on that, you need to make sure that the reimbursement is at actuals, like to like rupee, not more, not even less. Exact rupee reimbursement should be treated as reimbursement. Otherwise, it should not be treated as reimbursement. Second is there should be a supporting receipt for each of the reimbursements which you are claiming. This should be billed separately as a line item. And more importantly is the disclosure. And this disclosure in the returns is also something where we have seen lots of challenges. Many companies show this in their turnover as exempted supplies. Some of them show it as non-GST supplies, etc. According to me, these reimbursements need not be disclosed separately in the returns at all, because these are basically just a valuation exclusions. These do not by themselves constitute exempt supply. If you start putting them in non-GST or exempt supply, then department starts raising queries about it. They ask you for exemption notification. There's no specific exemption notification for this, and then it leads to a lot of unnecessary controversy. So the best course is that this reimbursement should ideally be routed through the balance sheet, not even become a part of your sales or purchases in your books of accounts, and it should be netted out. And even for the GST purposes, it should not be reported in your GST or 13B, because these are not really supplies in the real sense of the word. So I think that is a couple of controversies which we need to bear in mind when we start the entire discussion. Now that takes me to a long drawn controversy which has kept on, as I was saying, kept everyone busy right from 2003-4. And the basic difference or the controversy is whether, as a freight forwarder, you are a principal to principal supplier of a freight service, or you are a broker acting on an agency model, either on behalf of the shipping line or the airline, or on behalf of the shipper, and you are merely arranging or facilitating a transaction. Uh, Throughout this entire 20 years of evolution, the principles have been clear. The CBEC time and again have clarified the principles to say that in the industry you could either be a freight forwarder working on a P2P model, or you could be an agent or a broker working on an agency principle. And they've also listed a few criteria to define whether you are a P2P or a P2A. An important criteria which has been laid down is that who bears the risk and reward of the freight activity. And while there is enough guidance available, we have always seen the department act very myopically. And the reason for that, we are all aware that commission has always been liable for taxation, earlier service tax, now GST, and at a normal rate of 18%. Whereas freight has been exempt for a very long period. We are aware that up to service tax, there was no tax on the freight. Even in GST, up to 22, there were exemption notifications. Even thereafter, ocean freight is under 5%. And therefore, there is always an inclination of the department to somewhere try to reclassify you from a freight forwarder to a freight broker or an agent. And they try to do it by various allegations, which will try to come in a minute or so. But before we go into that, let us understand the fundamental difference. And again, we all of us do understand this being from the industry, that when you say you are a freight forwarder, you are typically buying a freight from an airline or a shipping line. The airline line raises invoice on you, you make a payment to the carrier for the said payment, for the said booking. You resell this freight at an independent rate. It is, while of course to some extent that rate will be based on the rate quoted by the airline, but you independently sell it. You have an independent negotiation with an exporter importer on a principal to principal basis, and basis that a separate rate which may be somewhere near the airline rate or may not be near the airline rate is quoted by you. You raise an invoice on the exporter importer, again on a principal to principal basis. You receive the payment from the exporter importer, and you then naturally pay to the airline shipping line. At times, there is a difference in the credit periods. So there might be a situation that you are invested in the financing. You might pay to the carrier earlier, and the client might pay you maybe 2-3 months down the line or 4 months down the line, depending on your credit terms. Many a times clients के साथ you might enter into an agreement of a long-term rate contract, which means that the shipping line or the airline might keep on increasing and reducing the pricing, which might expose you to price risk or even exchange rate risk. As we are aware recently, the entire geopolitical situation is a bit messy. And there, in these types of situations, if you have a, let's say, a yearly rate contract with a corporate, you might have to bear some element of the price risk or exchange rate risk. In certain cases, if you are the first freight forwarder and you are authorized by the carrier, you might issue your house BL or a house airway bill, in which case, clearly under the international regulations and even under the Carriage Act, you are acting as a contracting carrier as compared to the airline or the shipping line, which we know is the performing carrier. And these concepts of performing carrier and contracting carrier become very relevant when we discuss some of the defenses of the P2A arrangement. At times, you might consolidate cargo from multiple consigners because each of them may not have a full container load. So you might consolidate 4 or 5 consignments into a single container. So that consolidation also would suggest that you are a principal rather than merely acting as an agent to facilitate a transportation. At times, there is a consolidation across routes, which might also involve different carriers. In all these points, will suggest that you are actually providing a transport service. You may not own the vessel, you may not actually perform the transportation service, but contractually, you are the carrier and you are providing a transport service and you are responsible for this transport service vis-a-vis your client. All of this would suggest that you will move towards what is known as a P2P model and would treat this as a freight provided by you to the exporter or the importer. Now, when we compare this model with an agent, typically an agent would have a contract only to sell freight on behalf of the principal or maybe to procure freight on behalf of the shipper. He would typically earn a commission, which is a fixed percentage, sometimes 5%, 10%, whatever. He would typically never bear the freight price risk or reward. He would not issue his own bill of lading or airway bill and is mainly providing marketing services. This type of an intermediary service, the GST rate is typically 18%. And of course, there is a place of supply issue which has recently got resolved on intermediary services. And typically, whenever you look at the entire freight forwarding sector, the maximum controversy is around this interpretation of whether you are a carrier as a contracting carrier and therefore providing a freight service, or whether you are only a facilitator providing a business auxiliary intermediary service. And naturally, the tax rates differ, exemptions differ, and also the POS provisions differ. And that is what the department always wants to allege. And most of the notices revolve around these factors, and arguments and defenses also revolve around these parameters, which we have been talking about in this discussion of how of P2P versus P2A. I think the 4 important factors which we just touched upon but are relevant is the house BL or the house airway bill. Many a times we've seen in certain department interactions that they treat this as non-negotiable. Of course, having a house airway bill really brings the entire discussion clearly towards principle to principle, because the Carriage Act as well as the international conventions clearly hold the contracting carrier equally responsible for as the performing carrier for the transportation. But make no mistake, even if you, because many a times there will not be just one freight forwarder, there will be multiple layers of freight forwarder in the same transportation activity. In those situations, each of those freight forwarders could also be a subcontractor or could be a principal to principal freight service provider. Merely because somebody does not issue a house BL or a house airway bill may not mean that he is an agent. He could still be a principal. While I'm discussing this, what we have also seen at a ground level is that this concept of principal to principal versus principal to agent, while very relevant and legally strong, in many documentations, the freight forwarders actually write that we are agents. And that starts creating sometimes a problem, especially when we look at contracts with the shippers. Many of those contracts would say that I am going to provide you freight as a freight forwarding agent. I'll be providing you these many services. As far as possible, it may make sense to avoid the use of the word agent in those documentation and use the words freight traders or freight forwarders. But if we start bringing in agent everywhere over there, we have seen department starting to bring those clauses and say that, look, the agreement is talking about you as an agent, and you are arguing that no, you are not an agent, you are a principal. So there is a little bit of a conflict in that front. So that documentation becomes very important. What is also happening is the department is now bringing in one more entry under the HSN classification, wherein there is a separate entry called services provided by freight forwarding agents. And they are now quoting that entry to say that services provided by freight forwarding agents are distinct from services of transportation. And therefore, we will not give you the 5% rate, or we will not give you the exemption for import cargo. And these challenges are now becoming more prominent in case of, especially because many of the other place of supply related issues are now getting resolved. And therefore, these issues have now become more focus points in terms of the litigation. And therefore, we should be slightly careful about these parameters, about either documentation or ensuring that there is a house airway bill or a house BL. We discussed slightly about this, the fact that legal position might suggest that this is a composite supply, but the industry practice is to treat it as divisible contracts. And I also highlighted the risk of the carrier treating it as a divisible supply and the freight forwarder trying to bundle all of them into a consolidated rate. And that could create a problem in terms of accumulated ITC and the department arguing either unbundling or talking about a situation about a mixed supply and imposing the highest tax rate on the entire thing. So this is one more area which we should be slightly careful about in terms of documentation. These freight rates, I think all of us are broadly aware. Export ocean freight today is taxable at 5%. Import ocean freight is also taxable at 5%. If it is domestically charged, the shipping line will charge you. But if you are making a remittance towards this freight, then you will pay tax under RCM. Of course, on RCM, credits would be available to you. As far as air export is concerned, it was exempted up to a particular date. Thereafter, it is 18% taxable. Air import up to the first customs clearance is exempted under entry 19. But again, the controversy which arises is, does this entry apply only to the air carrier, which is the performing carrier, or will it apply also to freight forwarders who are the contracting carriers? We would believe that it applies to the contracting carriers as well. But as I was highlighting, we have seen so-called notices on this front, and matters are being contested on that front. Now, moving basis the Incoterms, you find various different situations coming in, and that comes in because of the changes in the place of supply provisions and the applicability of RCM. So when we expand this matrix and try to look at different Incoterms and the freight payment nature, we might see different types of answers coming. So the first, again, we'll go this slide slightly slowly because it interpolates 2-3 different facets into it. The first facet is, as a freight forwarder, I might be undertaking a sea export freight consignment. Now, when I'm doing this, again, as you are aware, the freight could be prepaid by the Indian party or collected from a foreign party, meaning your customer is either the Indian exporter or the foreign buyer. So basically, the second one is your XWorks example. In your queries also, there was this question of XWorks coming in. So that is the second example. Now, in the first scenario, where the freight is prepaid by the Indian party, clearly you are an Indian, the customer is in India, therefore the ocean freight tax rate of 5% will apply. Depending on the location of the customer, you will either charge C plus S GST or IGST because the place of supplier will be the recipient location, the customer location, and accordingly you will charge the tax. In this situation, because you are paying an output tax of 5%, whatever taxes are charged by the shipper to you will be eligible to you as a credit, and therefore there is no cash flow impact except for the credit periods or the timing differences. Otherwise, there is no accumulation or a cash flow impact because on the purchase side there will be a 5% tax, on the sales side also there is a 5% tax, and therefore both of them will offset with each other unless you are incurring a loss or any specific type of a situation like that. Let's look at the second situation where you are procuring freight from India but you are not collecting your contract is not with the Indian exporter, but with the foreign importer, typically an ex-works consignment, where you will be billing to a foreign party or a foreign agent. Many a times it will be directly a foreign consignee. At times it will be your counterpart or an agent abroad. In this situation, because your recipient is located outside India, when you raise an invoice on the foreign party, you will be treating it as an export of service. Please note, since 2023, the place of supply is the recipient location. In this case, the recipient is outside India, and therefore subject to conditions under section 25, 26, sorry, you will be eligible to claim export of service benefit. You will have to ensure that you receive the money in convertible foreign exchange. Now, two things here. The eligibility for export of service is subject to conditions. Most of those conditions today get clearly satisfied. Two specific things which the department at times raises as concerns. The first concern is that the services are not on a principal to principal basis. These are in the nature of intermediary service. And till recently, till March 26, the intermediary services were not eligible for export of service benefit, and therefore lots of show cause notices have been issued saying that you are not eligible for this export of service benefit. And there are lots of decisions also to say that no, this is actually a principal to principal model, and therefore the export benefit should be allowed. We already talked about the factors earlier, which would suggest that it's a principal to principal and not a principal to agent model. Of course, effective from 30th March 2026, the definition of intermediary has been dropped, and therefore that problem should no longer arise. The second problem which comes from the department side on treating this as an export is at times they confuse between one condition which says that the export benefit is not given for branch related transactions. So if you are an entity in India and you have a foreign branch, or you are a foreign entity having an Indian branch, in that case the export benefit is not given for those types of transactions. The department misunderstands this branch related provision to also apply to subsidiaries, and at times they get confused. And there's a definition of independent establishments of say distinct establishments of the same legal entity. They try to invoke that clause. The response to this would be clear. You will have to demonstrate that the foreign entity, the foreign party, is a separate legal entity from yourself, either a subsidiary or it could be a third party. That's much more easier. But what happens many times, the names are similar, and then especially the state tax authorities sometimes create a problem on this front. And the third and a more frequent problem is one condition which requires you to receive the money in convertible foreign exchange. And that convertible foreign exchange, typically the department insists that you get what is known as a foreign inward remittance certificates, EBRCs or FIRCs, as is talked about from your banker. What we are seeing is that at ground level, and this is something where I will spend a few minutes because this is a needless litigation which exists because of a little bit of, with due respect, a little bit of lack of priority by freight firms. Typically, whenever you want to say something is an export and you are raising an invoice to a foreign party, please note that there is FEMA law which is applicable. Under the FEMA law, whenever you raise an invoice in convertible exchange, you are required to realize that convertible exchange within 9 months. And if you do not realize it within 9 months, then you can seek extensions, and there are certain provisions which talk about write-offs, discounts, and bandits. What we are observing is that in many cases, companies or freight forwarders are not very conscious about these provisions. They would raise invoices to foreign parties in a similar manner like they raise to Indian parties, and they would try to collect it also in a similar manner, not realizing that in some cases they might contravene the provisions of FEMA, which again is a problem in itself, independent problem. But it also results in a issue in GST, because under the GST law, if you do not receive the foreign currency within a period of 1 year or such extended period as permitted by RBI, then the export benefit is denied and a tax liability gets triggered. And this is where most of the times the officers start denying you export benefits. One would say that no, I am receiving the money within 1 year, but the receipt of money within 1 year is always demonstrated through an FIRC. Now, in many cases, freight forwarders, especially if you're dealing with foreign counterparts, you have to receive some money from him. At the same time, you have to pay some money to him, because you would not only be selling freight to him, you might also be purchasing freight from him. So in those situations, many a times you might net off in your ledger account and either get a net inward remittance or make a net outward remittance. Now, in those types of situations, the FIRC, if the bank has no visibility of this set off, you may not get an FIRC for the gross value. And if there is no FIRC, the GST department is likely to deny you your export benefits and then demand a tax from you. Same issue will arise in case of write-offs. You need to get approval. There are certain write-offs which are permitted in terms of discounts. Otherwise, you have to get an approval from the RBI. And also in case of bad debts, which also is an important parameter which we need to bear in mind. So this is one area where a lot of non-compliance might come in because of ignorance or lack of enough care in terms of the FEMA compliances. So one advice on this front would be that please relook at your FEMA compliances and look at your documentation to ensure that all your FEMA compliances are up to date, because that has clearly a trigger impact on your GST as well. Assuming that yes, your exports are eligible and they are allowed to you correctly, you have an issue of accumulated ITC here, because on exports, you might, as you are aware that there are two options. A general option always is you export without payment of tax or against a letter of undertaking. So you don't pay any tax on your output, but the carrier with whom you are dealing with is in Indian and is going to charge you GST on the, because both of you are Indians, he is going to charge you GST. That becomes an accumulated ITC. Naturally, you will file a periodic refund application. There are costs, less said about it, the better. There are timelines and cost related issues. We have a slide dealing with the refund related challenges, but this is one trigger point of refund where you have an accumulation of ITC and you will be filing a refund application. Many a times you might be paying freight to a foreign counterpart and collecting it from another foreign counterpart or the shipper. In those situations also, there will be an RCM on the remittances made abroad as well as the export. So again, there would be a situation of an accumulation in that type of scenario. So that is as far as the sea export is concerned. Similar variations will come in air export. I think the answers are somewhat similar, except for the fact that as far as air is concerned, the rate is 18%. Otherwise, you might examine that the answers in the third and the fourth line are similar. Now we move to the fifth basket, which is the sea import, which is prepaid at a foreign party. This also, there was a lot of controversy of whether the importer is required to pay a GST on the embedded freight in the CIF value. And of course, we are aware of the Supreme Court decision in Mohit Minerals, which struck down this IGST on ocean freight or in CIF imports. So luckily here there is no challenge. Anyways, the freight is paid by the foreign party to a foreign shipping line, and indirectly that amount gets embedded in the CIF value of the import cargo itself. No GST implications on the fifth line. Luckily enough, that's safe. But if it's a sea import where there is a collect shipment, then naturally there is a 5% POS when you are charged 5% GST applicable on the ocean freight, and the POS will be the customer location in India because you are collecting it from the Indian customer. Again, you will charge the GST. I don't think there will be any accumulation issue coming up over there. Air import prepaid, again, this could become an export of services. As far as air import collect is concerned, it is exempt under entry 19. So that is not a problem. As I said, the first freight up to the customs clearance, there is no GST implication. So these are some different situations which we can think through. Of course, in the questions, we'll deal with the real life examples also and the nomenclature which the industry uses. We talked about the core controversy, whether a freight forwarder is an agent or a principal. Lots of judicial precedents, Greenwich, Tiger Solutions are two classic examples. Bax Global is there. Vodafone also defined intermediaries. And recently, as I was highlighting, there has been an amendment which clearly says the intermediary provisions are deleted. So from 30th March 26 onwards, there is no issue as far as the intermediary aspect is concerned. But the deletion of intermediary provision means that if you have a foreign counterpart and you are paying a freight to them, either by way of a freight or by way of a profit share, you will end up paying GST on that. Earlier, freight was liable, but profit share, people used to take a position that that is an intermediary service. Now that situation of profit sharing goes for a very different analysis post 30th of March 2026. As far as the basic freight is concerned, earlier it was destination based, but October 23 onwards, this has become recipient based, and we are aware about this implication. Most of us have implemented it well on our output service, but on the input side, this presents a significant challenge. And the challenge basically comes is because when you are paying a freight to a foreign company, foreign counterpart or a foreign agent, that remittance becomes liable for GST under RCM, and that tax then at times becomes a an accumulation, and then refunds increase because of this, and with all the associated challenges coming out because of that reason. The issue and this all of this discussion is about the freight. When it comes to origin and destination charges, how are we going to deal with it? One way to look at it is to say that these are performance based services, because you can't provide a loading, unloading, or a terminal service without the goods or the cargo being available to you. And therefore, these services, if they are in India, even if billed to a foreign client, should be liable for GST. And this has been the traditional position. However, in 2024, a circular was issued which tried to say that warehousing and intermediary loading unloading activity carried out and in the course of transportation should be given the same treatment like transportation. Basis that clarification and its own internal understanding, MTOI has issued an advisory, and all of us are aware about that advisory, to say that these origin and destination charges also, the place of supply will be recipient driven, which means that we will not look at whether it's an Indian charge or a foreign charge. We will anchor it based on the Indian customer or foreign customer. If it's an Indian customer, location of the recipient, you will charge GST. If it's a foreign customer, location of recipient outside India, you will not charge GST. Same way for reverse charge mechanism, you will apply reverse charge mechanism for all charges, irrespective of whether it is Indian or origin charge or destination charge, whether it happens in India or abroad. So I think that is a major shift in the emphasis from performance based interpretation to a recipient based interpretation as far as origin and destination charges are concerned. And necessarily this results in a major cash flow issue, especially considering whether you are treating the overseas agent as an intermediary service provider or a freight provider or a supporter of performance. Of course, the tax rates will also change. If it's a transportation procurement, it will be 5%. If it's only a supporter of performance, then it will become, or an intermediary, then it becomes 18% tax rate. And this 18% can then result in a major accumulation and refund related challenges which come in because of that. And that brings me to the basket of discussion about state specific registrations. And we are aware GST is a state specific law. Most of the freight forwarders are multi-state organizations and would have branches in different states. Now, when you have branches in different states, the first question which typically comes up is, I have a client, I have to raise an invoice on him. I have registrations in Maharashtra, Gujarat, Delhi, etc. Which state should raise the invoice? And a very classic question which is coming up is, I am handling the cargo at Nhava Sheva. Client is in Gujarat. While the cargo is handled from Mumbai's office, the invoice is raised from Ahmedabad office. Whether this is correct? Again, the answer to this will depend on the definition of the location of the supplier, which is given under the GST law. And while there can be a little bit of interpretation issue, the key principle which one has to look at is that you have to anchor yourself on the contracting state. Unluckily, in most of the clients, what we find is that there is not enough documentation. Unless there are structured long-term rate contracts where you have agreements, most of the activity in a freight forwarder's business happens either telephonically or through email correspondences. And therefore, at a subsequent point of time, to demonstrate that you raised an invoice from Gujarat, you need to substantiate that the contract was entered into by the Gujarat branch with the customer. And at times you may not have that type of a comfort. So that is very important to ensure that you have either a purchase order or an agreement or at least a documented email trail to correlate and align your billing location, the location from where you are billing, with the contracting location. If that is not happening, at some place you can face problems, and you might get notices from other states also on this front. So this is something which we have to be slightly careful about. Also, a care which might be required is a situation where there is a mismatch between the procurement and the invoicing, the sales. Many a times, especially if you are directly representing the airline or a shipping line at a particular port, you might be given the BL authorization from a particular port only, and therefore the carrier will raise you invoice only for that state where the port is located. So, for example, if you have an authorization for Tamil Nadu and you are going to ship the cargo from Tamil Nadu, it's likely that the carrier will raise an invoice of freight on the Tamil Nadu location. Now, if you are raising a sales invoice from Maharashtra, then you have a challenge because your input tax credit is in Tamil Nadu, your output tax is in Maharashtra. So you will end up paying taxes in Maharashtra and you will accumulate credits in Tamil Nadu. So the question is whether this is correct, and if it is legally permissible, what are the situations, how do you rectify this? According to me, this can present a little bit of a challenge because essentially whether there is a service by Maharashtra, Tamil Nadu to Maharashtra can be questioned. So in these types of situations where your procurement is in a particular state, it would be more advisable to align your sales also from the same state rather than have a disjoint situation of procurement in one state, sale in another state. Despite that, if one or two examples you end up in a situation of an actual imbalance because the businesses are dynamic, in that case you can do a cross charge or an ISD and try to push the credit from the originating or the procurement state to the invoicing state. Please note, all of these will have impact on your refund applications because if your sales are from Maharashtra, procurement is in some another state, and you are claiming refund in Maharashtra. Let us say the sale is in the nature of an export and the domestic procurement is in Tamil Nadu. In that case, your tax is charged by the third party to a Tamil Nadu registration. Your accumulation is in Tamil Nadu. Your export happens from Maharashtra. And then we are seeing that there are situations where the department denies refunds because while you might do an internal billing, the department is always slightly skeptical about the refund of a tax charged on an internal billing vis-a-vis a third party billing. And therefore that could also create a little bit of a difficulty in terms of refund applications. Refund challenges are many. We discussed about the POS dispute, intermediary performance, etc., wherein they are always raising issues. The second issue which we touched upon is the situation where an unbundled supply is bundled by the freight forwarder. We come back to that discussion which we started with, wherein we talked about a situation where a carrier is charging 5% on freight and 18% on other charges, and you bundle everything together and charge output freight at 5%. Necessarily, to the extent of inland transportation, CHA, other activities, there is an accumulation. Unluckily, there is no refund mechanism. There is an inverted duty structure, but the refund for inverted duties are eligible only for inputs and not for input services. And more importantly, if there is an accumulation of this nature, the department might raise a question of mixed supply and in fact demand 18% on everything. So therefore, if you are accumulating ITC because of this type of a situation, we have to be very careful about this type of mechanism and try to avoid it as much as possible. Also, with the exports increasing and with this entire concept of POS being the destination, being the location of the recipient, lots of refund applications are getting filed. We need to bear in mind that when we are applying for a proportionate refund under Rule 89, the adjusted turnover and net ITC, because there's a formula which has been prescribed, and that formula is based on a specific period. And therefore, if your ITC is in one period and your export realization is in a very different period, in that case, the formula may not give you the best results. So one has to be slightly careful about the practical application of the formula in the specific situations. And same thing applies for GST and wise refund matching also. You might face a little bit of a difficulty on that front. And as we are aware, there are different refund processing timelines. Center has a different timeline and method of its own. Each state has a very different way of looking at things, and they demand different types of documents. And the timelines of processing them are also very different. And the costs of processing the refunds are also keeping on varying. So all these practical challenges we have to be careful when we are looking at a refund application and the structuring. So, with that background, what are the key takeaways from what we discussed today? First is understanding a proper classification as P2P or P2A, and ensuring, while we mostly agree that most of the transactions are P2P, we need to understand that this classification as principal or agent determines many things, including the tax rate, the determination of place of supply to a large extent, and eligibility for exports and other benefits. So this is going to be a very critical parameter, and please ensure that we have sufficient documentation to suggest that we are principal to principal and not getting loosely classified as agent. So that's the first takeaway which we need to bear in mind. In case of door-to-door composite contracts, think about bundling, unbundling carefully. Look at what the carrier is doing. Look at the holistic model. Otherwise, there can be a difficulty in case of composite supply versus a divisible contract. You might take a slightly different view. Legally, you might be defending. It might be possible to defend, but it might open up a Pandora's box across. Third is understand the recent POS changes. We are and the legislative changes, the freight becoming taxable, the POS rule change for GTA, goods transport. All of that requires a different analysis, and make sure that your positions have changed basis these changes. Finally, for RCM on overseas agent and counterparties is becoming very, very critical. So we have to be careful about each remittance, because at the time of payment, if you pay the RCM and claim credit immediately, there is really, it's more a compliance issue. But if you delay it maybe 6 months or 1 year down the line, you have interest as a cost which comes in. And there could be also a question on ITC eligibility and debates around that front. So we have to be slightly careful and conscious about foreign remittances made to overseas agents, either directly or by way of netting off. ISD cross charge for multi states is going to be an important parameter. And finally, making sure that you have appropriate documentation to support all the positions is what is going to be the key for your entire implementation and your entire litigations which come in across at various forums. So I think this is what I had from my side. I had purposefully gone a slightly faster because most of this is known to all of you. I would spare more time for questions, and maybe we can take up the questions. Chetali, how do you want to deal with questions? You would want to take them up one by one, or?
Yes. Sunil bhai, first of all, thank you very much. It was absolutely fascinating. And the one question before I start off with the balance part of the thing is people will ask, can we share the presentation? So, with your permission, will we be
Yes,
able to share the
definitely.
presentation?
Definitely, you can share it. I have shared it with you. You can take it
Yes.
ahead from there.
Okay, perfect. And with that, we have a lot of Q&A. We've got a lot of questions in the Q&A box. We've also got some, which I will take it. And then we've got a couple of agents who had filled up the Google form and they had sent it. So with your
Sure.
permission, before I start off, Rama sir, Sunil bhai, Rama sir, you could not speak in the beginning. Would you like to come online right now or after we finish the Q&A? Okay, by the time Rama sir comes, we can start off.
Sure.
Sunita, I'm starting right from the beginning. You've already explained everything, but nevertheless, still we'll start. The first question we had asked was by Rama sir, clarity on Xworks shipment on exports, where the entire cost is billed overseas and inward foreign exchange remittance is received as well. Can this be filed under LUT?
Yes. So we did discuss this.
Yes.
So two parts to this. The first part is classification of this transaction. As I was highlighting, that industry typically divides the origin charges and destination charges separately as compared to freight, even in case of an ex-works billing. Despite that, because of the CBEC circular, MTOI has taken a position that the origin and destination charges will get the same treatment like freight, and all the charges will be not in performance basket, but all of them will be treated as location of recipient, which is outside India. And therefore, basis the MTOI discussions, one would treat it as a incidental to freight, everything as incidental to freight, recipient based basket, and therefore claim everything as an export of service. If you have an LUT, you will not end up paying any tax.
Thank you very much. Rama sir? Rama sir, you still have a voice problem. Audio is not working. Okay, no worries. Do you want to join back from your phone and come back again? Okay, we'll go on with the Q&A till then. We have Aarti Sharma. Prior to October 1, 2022, the ocean freight for this shipment was exempt. However, the inward expenses included detention charges incurred due to an error by the freight forwarder, which were not recovered from the buyer. We have claimed ITC on all related inward charges. It is my understanding that under GST rules, ITC can be utilized against other taxable supplies, regardless of the specific supplier-buyer relationship for that transaction, provided the entity has other taxable outward supplies. Please clarify.
Yeah, this is an interesting point, and I am happy that this has come out here. Uh, as you are aware, prior to 22, there was an exemption for ocean freight. And the general principle of input credit is that if an expenditure is related to an exempted supply, you are not eligible for input credit. There are detailed provisions under rules 42 and 43 denying that input credit. However, for ocean freight, under the rule 42-43, through an explanation, ocean freight was specifically excluded from this rigor of denial of input tax credit. And therefore, the answer to this simply is yes, ocean freight was exempted, but because of the explanation to rule 43, the input credit would be available and could be adjusted against other activities. When I'm saying this, I would also like to draw a caution that some state tax authorities are interpreting this explanation to rule 43 to apply only to common services and not to identified services. According to me, that's incorrect, but yes, that litigation is very much there. Subject to that litigation, a simple answer to this question is that yes, you are eligible for credit and you can adjust it against any other output taxes that you might have against your domestic invoice.
Thank you. I think your answer was what everybody was looking for because we have a lot of thumbs up while you were replying. So, to Miss Aarti Sharma, thank you very much for this. We have Mr. Suresh Babu. If a freight forwarder is registered in Mumbai and Chennai, whereas he is using the services of his subsidiary of a Chennai registered GST, and whereas he does not have it registered in Chennai, freight forwarder will be billing him from Mumbai. Is this practice correct? So essentially what he is saying is that if a freight forwarder is registered both in Mumbai and Chennai, and he is using the services of a subsidiary based in Chennai with a registered address of Chennai, whereas the freight forwarder does not have a registered office in Chennai, is what I am presuming, because he's using a subsidiary in Chennai, then will the freight forwarder be billing from Mumbai? Mr. Suresh Babu, is it possible for you to please reframe your question and send it
It's a
and
bit
type
confusing.
it?
Yeah.
Yeah. Can you please reframe this and send it back to us? We will definitely take this. Mr. Saurabh Mehta is asking, in case of ocean import transactions, the overseas agent raises the invoice at the time of shipment initiation. However, billing to the customer is carried out only upon the arrival of the shipment and release of the delivery order, typically a period of a transit time of 30 days. In this context, clarification is sought on the timing of liability under the reverse charge mechanism for the overseas agent invoice, specifically whether the RCM liability arises at the time of issuance of the invoice by the overseas agent or upon the completion of the shipment, that is at the time of DO release.
So the answer to this is that the time of supply will depend on section 13, which is defining when the tax has to be paid in the case of reverse charge mechanism. And that provision basically says that you will pay the RCM at the time of payment to your foreign counterpart. So when
Okay.
you make the payment of freight to the foreign counterpart, it's not the date of the invoice or the initiation of the shipment which is relevant, but the date you make the payment to the foreign counterpart is the date on which you will pay the tax. But the law also says that if you don't make a payment within a period of 60 days, you will end up paying the tax on the 61st day.
See, this is what the thing is, because a lot of us, what if, so this is a very interesting thing, Sunil Bhai,
Yes.
because some of us have credit of 30 days with our overseas agents, some of us have 60 days credit, and there are and a lot of us who do netting off because of the volume of transactions
Yes,
between
netting
us.
off the concern I've tried to bring about earlier also in my
Correct.
talk also.
Correct. So in this particular case, since we are getting back into the whole thing, I'm sorry, some of it may be repetitive, but it is important. Then when we are netting off, what happens to the RCM? Because the netting off can happen 1 month later also, can happen 2 months later also.
Yes. So that is where, I mean, if with your permission, I want to spend 5 minutes on this process of
Yes,
netting off,
please.
because I think it's a very important problem in this industry, according to.
Yes.
So please understand, under the FEMA regulations, there is a concept called EDPMS. I am not sure how many freight forwarders are actively aware about this entire process of EDPMS, which says that for every invoice in foreign currency which you raise, you have to upload it on the portal. And there is a database managed by the banking system where, as and when you receive the remittances, you have to knock it off through an FIRC. Well, of course, a lot of it is done by the authorized dealer, subject to or your banker. You are on mute, I think. If you are speaking to me, you are on mute.
No, Sunil Bhai, I'm listening to you. Please go ahead.
Okay. So the point which I was trying to therefore raise is that you have to make sure that whatever you are doing as netting off is something which is permitted under FEMA first thing. Most of the freight forwarders assume that if I have a invoice of $100 to, let's say, XYZ UAE, and I have a purchase invoice of $60 from XYZ UAE, I can very easily cut a check of $40 or rather make a foreign remittance of $40. Please ensure proper FEMA compliance to start with, first thing. Second thing is, even if you just raise a foreign remittance of $40, please note that your accounting would require you to account for $100 and $60 separately. Therefore, when you make a net remittance of 40, you are not making a remittance of 40, you are making a remittance of 100, and you are inwardly remitting 60 more. And all your answers will be based on that. So coming back to your time of supply, let's say there is an inward remittance or inward bill of 100, there is an outward bill of 60, and you are netting it off, and 40 you are remitting in the 90th day. The law will say that on 61st day you have to pay the tax. Now, if this netting off happened on the 30th day, To the extent of netting off, you have to pay on the 30th day, and for the balance, you have to pay on the 61st day. I hope I'm clear.
Yes, very clear, Sunil bhai. I think that clears a lot of doubts because netting off is something of, again, an issue for freight forwarders. And thank you for spending this much time in explaining this. I'm sure if people have questions more further on netting off, we will come to that in the later part of it. Keeping in mind that we are talking about RCM, Miss Renuka Salian is asking, that RCM credit we can claim same month or next month, but I guess you have already discussed that and you've already
Yes, it
explained
can.
that.
You can claim it in the same month. There is no problem.
Okay. We have Miss Pooja Bhatt, C import. If the freight is prepaid by foreign agent and if Indian freight forwarder collects freight from the Indian importer, I think Miss Pooja, your question is incomplete. May I please request you to retype your question, reframe your question and come back because I don't quite understand what you would like a clarification on this for. Mr. Avinash Khandekar, we are receiving CSR, cargo sales report from airlines. There are airlines who are giving discount to us in their CSR. The airlines are deducting TDS on this discount amount and showing in their TDS return under section 194H, which reflects in our 26 AS. How airlines can deduct TDS under section 194H since it's showing the amount as a discount in their CSR? This may lead to GST para from GST department since the amount deducted by airlines is under section 194H and it is appearing in the freight forwarders as 26 AS.
This has been a live issue, and people have received notices on this point. Uh, Only my understanding was that the industry had adapted itself. And to my understanding, I may be subject to correction, is that of late, most of the airlines are issuing a net commissionable freight. And
Some of them are
therefore,
issuing, sorry to interrupt, some of them are issuing net also.
so that was my understanding that many of them have adapted to net. If they've adapted net, there is no issue. If they are not adapting to net, definitely this is a challenge because it involves a bit of a conflict between what you want to say. You want to say, I am a principal. But the conduct of the airline deducting TDS would suggest that to some extent you are an agent. And the field will be open. There can be needless litigation on this front. Just naming something as discount doesn't help. We are aware of the Singapore Airlines decision of the Supreme Court, wherein the Supreme Court very clearly held that these are agency transactions and TDS is applicable. So one has to be very careful on this front because it can result into a lot of unnecessary difficulties. Many organizations prefer to have a separate entity only for this commission part and separate it from the freight forwarding itself. Otherwise, you can face a difficulty.
Thank you. Miss Aarti Sharma, time limit of repatriation of foreign exchange from November 2025 has been increased from 9 months to 15 months. Would you be able to, she just wants a confirmation or a clarification on this.
I would believe so, but I have not tracked it. Earlier, it was 9
Yes.
months, and then there are some changes, so maybe it would have happened.
Okay. Ms. Aarti, this is something that your CA should be able to tell you about it, and we can't take it up in this thing. But if you can please reframe your earlier question and send it back to us, we will definitely take it up. Mr. Akash Shah says, we operate as a freight forwarder, procuring ocean freight from carriers and reselling it to our customers with a margin. We only use the carrier's master bill of lading and do not issue house bills of lading. In this case, would our services be classified as P2P or P2A? Additionally, if this is considered to be a P2P model, are there any specific licenses or registrations required for us to operate, given that we are not issuing house BLs?
So as I highlighted, Chetali, that some tax authorities are taking a view that issuance of house BL is a must. But my interpretation is that no, that is not the only basis to define something as a P2P. If you have an independent contract with your customer, and this is something which you should be more careful about, especially if you are not raising a house bill, please ensure that you have some documentation, a proper structured agreement with the customer, which will say that he is interested not in a mere facilitation or an intermediary activity. He is actually interested in procuring freight from you. If required, bring in some clauses relating to risk and responsibility of the cargo while in transshipment or transportation, and raise proper invoices on the customer. I think that should be able to substantiate that this is a P2P transaction. I don't think there is a separate type of a license or anything which is required other than your normal GST registrations and things like that. So that should not be a problem. But yes, you need to ensure that you have a proper documentation of the agreement and the risks and rewards in place.
So, Nirva, in this, I personally have a question. Is
Sure.
that I think I can safely say that I'm speaking for a lot of us who are present over here, is that when we onboard a new shipper or a new client, importer, typically what we take is an authorization letter from them, which has certain set standard rules, as in, like, they are authorizing us to do customs clearance on their behalf or freight forwarding on their behalf and all. The contract part is typically what an MNC company would have with Indian forwarder or with an Indian customs broker. But an Indian shipper, unless we are talking the Fortune 500 companies or the 500 crore companies, there is no really, the small SMEs and MSMEs don't have these kind of contracts. So if you are saying that in order to classify ourselves under this P2P thing, we should have a contract, then we should get our lawyers to draft something, or can we ask the
One standard
association?
template you can prepare. Basis,
Okay.
as you rightly said, you rightly classified the industries into three, clients into
Yeah.
three baskets. And the first two baskets typically are careful about entering into structured contracts and rate agreements also at times. Maybe you pick up some of the clauses from them and have a
Okay.
sort of a standard template which you will use wherever clients don't give their own templates. But make sure that there's something.
Okay. I think then we will discuss this as an association, whether it is ACAI, whether it is BCBA or Triple FAI, and we'll come out with something. But this is very important. Thank you very much for clarifying this. Miss Aarti Sharma, again, table 5F of GSTR 9. Non-GST supply includes no supply. Can one here report as pure agent?
So, as I said, I am not very happy about reporting reimbursements in either of GSTR 1, 3B or in 9. For a simple reason that the moment you report it, it unnecessarily attracts a lot of scrutiny. If you are also not reporting it in your P&L as a top line, I think you don't need to report anywhere. But if I am also aware that many freight forwarders, because of TDS and many other reasons, report the top line as gross, including the reimbursement component. In that case, you might need to put it as a valuation adjustment in 9C. Now, there is, as you are aware, there is GSTR 9, which is annual return, and 9C is a reconciliation state. So in 9C, you can put it as a valuation adjustment that, look, my P&L shows a top line of 100 crores, but out of that 30 crores is reimbursement. So 100 minus 30 is 70 is what my value of taxable supplies under GST is all about. Something like that. Again, that's table 5 only, if I'm not mistaken, of 9C. So my suggestion would be either no reporting anywhere if it's all a balance sheet item. If you have taken it to P&L, then report it in 9C only at the end of the year, not in every month's 1 and 3Bs.
Thank you. Mr. Rajesh Menon, I know we are not discussing transportation today, but he just has one question. Can we charge GST at 18% for transportation when we raise our invoice to the shipper? So I am presuming that he's talking about when they are raising the invoice for the freight and all, and they are charging the ex-works charges. But this would come, I presume, Mr. Rajesh, that is what you are asking about, as to whether he can raise 18% for transportation when they raise the invoice to the shipper.
I assume you are talking about road transportation here.
Yes.
And domestic road transportation. So
Presumably.
domestic road transportation typically falls into a category known as GTA.
Okay.
And in GTA, the law says that either you charge 5% as RCM without input credit, or 5% as forward charge without input tax credit, or 18% with input tax credit forward charge. Now, also please note that the choice of forward charge versus RCM in case of a GTA is not transaction wise. You have to choose it across the entity for the entire year. So if this gentleman wants to charge 18% as GTA forward charge, he has to ensure that he can't just pick up one client and for that he charges 18%. He will have to charge 18% throughout the year for all his customers for similar transactions. And for that, he has to file what is known as a declaration at the start of the year. There's a very specific declaration which he has to file. So he has to ensure all that compliances, then only he will be able to do 18%. Otherwise, he cannot do it.
Okay. All right. Miss Tara Beligauda is asking, in the time of overseas invoice purchase on ocean freight, we have to take GST on RCM.
No, I didn't follow the query as well.
When they in time, so when we as a when we as an freight forwarder are asking our overseas agent to book cargo on our behalf, and when we get billed by our overseas agent for the invoice and it contains the ocean freight, because
Yes.
if it's an FOB shipment, they'll bill us for the ocean freight. She is asking whether we have to take GST on RCM.
Yes, I think that is what we discussed. In fact, we also discussed the time of supply provision.
Okay, done. There's lots of questions.
I think
Okay,
as a follow-up question, somebody has mentioned that GTA 12% rate is there. That has
correct.
changed from September 2025 when GST 2.0 was introduced. 12% has changed to 18 from September 25.
Okay, he says that it is 12% with ITC, 18% is only for those who do not issue credit notes. So it's 18% across the board now.
Yeah. Our 12% rate no longer exists after September 25.
Okay. So, Mr. Sitaram, that question, I hope it helps you. Mr. Prasad is asking, presently in the market, not all clients except for single type of GST charges, and GST charges vary from client to client. If may follow one system, then we may lose the customer and business. Actually, Mr. Prasad, if it is all right with you, we are not discussing transportation today. So if this is in addition to your transportation question, may we please take this up at the time when we are discussing transport? Or if it is related to freight forwarding, please clarify and we'll be happy to do that. Thank you. Mr. Nagendra Shah is asking, what documents should we keep in record and submit to get our refund within a week as prescribed in provision, as officers harass for documents and hold refund for long? Also, are we eligible for refund on contract to contract basis, even if we are registered as an intermediary? So basically, so that is his question.
So basically, there is a standard checklist of documents which has to accompany every refund application.
Okay.
Which is clarified in a circular. It typically ranges from your basic invoices, FIRCs, input invoices, bank payment proofs, and a table explaining the entire sales, input credits, the calculations, and all those things. Over and above that, most of the authorities also ask for agreements with customers to establish that it is an export. They also, of course, FIRCs and invoices and linkages of invoice with FIRC is a part of the standard documentation list. So all these documents you have to be careful about and putting them in detail in the application itself. When you are filing the application, we also find challenges in terms of the size restraints on the uploading of documents. So maybe you just upload the statement and then write that we will submit the balance documents manually and then attach them manually with a covering letter to the officer, because the process of refund is online and there are certain size restraints which are very prohibitive.
Thank you. Mr. Rajkumar is asking, they are a CHA, they and our supplier is billing us at 5% of sea freight, whether the same percentage will be billed to our customer for availing input, we need to charge 18%. So I am presuming, Mr. Rajkumar, that you are talking about 5% for import sea freight that you are using a freight forwarder. And your question is that whether you should be billing your client 5% or should you be charging them 18% to avail the input? Sunil Bhai.
Yes. So, availing of input is irrespective of your position of 5 or 18. According to me, you also step into the shoes of a freight forwarder here. You are no longer a pure play customs clearance agent. You are having two different roles. And for the freight forwarder role, you will charge 5% ocean freight, GST, and claim the input credit of the tax charged by your counterpart.
Perfect. All right. Mr. Sachin Narkar actually has two questions. Is RCM applicable on freight reimbursement paid to a foreign agent in a foreign country for import of service? And what if not declared RCM on the freight paid to the foreign agent in GST? Then what would be the impact of penalty and interest on the recipient in India? So I guess Mr. Sachin Narkar wants to say that they have import shipments which are coming in, for which they have to make the freight payment to the overseas agent for the arranging of the shipment, whether RCM is applicable for that, number one. And most important, whether it would be considered as a freight reimbursement, because the overseas agent will also be adding his profit share and then billing us over here in India. So there are two ways. Either they give us a net cost, which includes their profit share, or they give us their net and they show their profit share separately in their invoice to us. And the second question that he is asking is that if we do not declare the RCM on freight paid in the GST, then whether they have any penalty or interest.
Sure. So I think the questions, as you rightly pointed out, is from this word reimbursement, because in the earlier questions we have already dealt with a case where you are procuring freight from your counterpart. So here I think the emphasis of discussion is that look, he is an agent. He is actually not selling you freight directly, but he's only procuring a freight from some other carrier and supplying you to you as an agent. And therefore, the question being asked is whether you can treat it as a reimbursement. According to me, the entire discussion of treating it as a reimbursement is academic, because even if you treat it as a reimbursement, it basically means you are paying a freight to the carrier through him. Either you are paying a freight to him directly as a principal, or you are paying a freight to the carrier through him as reimbursement. You cannot deny that you are paying a freight. And if you cannot deny that you are paying a freight, RCM gets triggered in both the situations. Problem is, if you say freight reimbursement, the officer might go into a slightly different matrix and then say that to the extent of profit share, RCM will be at 18 and not 5. So therefore, to avoid all the controversies of this nature, I am not very excited about walking the route of reimbursement or agency in case of international transactions. I would say whatever is the reimbursement you are making is actually a payment towards procurement of freight, irrespective of whether you are compartmentalizing it as net plus profit share or just a single consolidated figure. All of that, I would believe, is a subject matter of RCM at 5%. You should pay it at the time of payment or 61st day from the invoice. If tax is not paid by that time, there will be interest. Penalties, if you are paying voluntarily, you can defend because it is discretionary, but interest is mandatory.
Thank you. They're also asking if there is a possibility to share a circular or schedule entry.
For
Mr. Sachin, you will have to elaborate on this. So please do come back. What circular are you asking for and what entry you are asking for? Mr. Gokul, we've already replied on your question regarding the 5% on the agent and that you have to pass it on. Sunil Bhai has already responded to that. Miss Sandhya Sawant is asking if a
Pakka.
carrier has unbundled charges as ocean freight 5% and BAF at 5% or peak season surcharge at 5%, can we bundle the freight and all the surcharges and combine it together as freight at 5%?
Yes, this example I'm okay to do it because the carrier also is treating each of these line items as components of freight only. In this, I don't see there's a problem. The problem will arise when you have sum of 5, sum of 18, and then you are bundling it into 5. Here, everything was 5 and you are merging everything and charging 5. So I don't see a challenge here.
But what if the peak season surcharge is charged at a different rate and freight is still charged at 5%?
Uh, Generally, peak season surcharge also should be 5 only by the carrier. But
Okay.
if I am aware that recently there was some specific type of a charge which was imposed after this Hormuz issue, and that they have taken is a non-manifest charge, and carriers are charging 18 on that. Now that charge you cannot bundle with freight.
Okay.
I missed that name. Some of you all might be aware about the code or the name. It's not the BAF or the
War
PC.
is surcharge. It's war is surcharge.
Yeah, so that is not a part of the manifest, and therefore carriers are charging 18 on that.
Okay. So we cannot bundle it together then.
That you cannot bundle.
Okay, thank you. Mr. Gokul, you will have to elaborate on your question when you are saying that GST department is raising a query why you're not charging 18%. Is this in relation to the 5% of the GST that we charge on the sea import freight? Please do clarify and we'll be happy to take that question on board. Mr. Saurabh Mehta is asking, in case of ocean import transactions, the overseas agent raises the invoice at TIE. Okay, this has already been answered, Mr. Saurabh, so this is done. We've answered that. Mr. Gokul is saying that if they are charging the customer, they are not paying as they know the shipping line and liners are charging 5%. But Saurabh Bhai has already, Sunil Bhai has already clarified, Mr. Gokul, that if the shipping line is charging you 5% and the freight forwarder is charging you 5%, then you in turn also need to charge 5%. Correct, na, Sunil Bhai?
Yes, perfect.
So this has been done. We have Mr. Sandeep Nagmal is asking how to charge air freight charges to the customer with our margin as GST exempt service. Is it possible?
So I understand you are talking about import freight.
No, this could be both export as well as import air freight. Because when
Export
we
air
charge
freight is taxable, no?
export, yeah, so then it has to be air import freight then.
Because export there is no exemption. There's an 18%
Yeah, correct,
tax.
correct. My bad.
Okay. So if it's an import air freight, if you are a freight forwarder and acting as a principal, and all the principles which we discussed today to decide whether it's a P2P or P2A will apply. If that be the case, you will be eligible to treat your margin also as exempted. I need to caution you that the department can raise an issue. Therefore, please ensure that you have documentation to support that this is an import consignment. If possible, have a copy of the import manifest or the bill of entry, wherein the clearance so that demonstrate that the movement was prior to the customs clearance. Because the condition clearly says that the air freight is exempted only up to the first customs clearance station in India.
Okay. Mr. Muralidharan has, we are a customs broker for an imported shipment delivered on a door-to-door basis. Mr. Muralidharan, I'm presuming it could be a DDU because DDP duty is not an issue. We have raised a service bill to the overseas supplier in USD, covering the local transport, shipping line charges and duty. So, okay, it's a DDP shipment. Kindly confirm whether GST is applicable on this invoice or if it can be treated as an exempt.
So I think this is something similar to your Xworks example.
Yes, correct.
And as we answered earlier, the employee position on this is very clear that all the charges are recipient basket as far as the place of supply is concerned. and therefore everything that you charge to the foreign company would be exempted, would be export of services and no tax payable on it, subject to you receiving it in convertible foreign exchange.
So for DDUs, DDPs, there is no GST to be
Yes.
paid.
As I said, there is a counter argument that the origin charges should be liable because the performance of the activities in India to that extent. But that is what MTOI has clarified, and there's an internal controversy. But I think the industry would go by the MTOI clarification. So that's how one would look at it.
So this will come back when we discuss the CHA activity, because a lot of us, I mean, all of us who are CHAs also get work with overseas agents, not just as freight forwarders, but also for doing DDP, DAP, as well as DDP shipments. So DDU and DAP shipments are pretty much the same. I mean, of course, people will have difference of opinions on that, but for the DDPs also. So I guess we will get a lot more questions on this again when we are looking at the CHA activity.
Sure, sure. And
All right.
that's why that's the reason I'm caveating these responses, because
Yes,
I am aware. I mean, if you recollect, even in XWorks, I had caveated and brought in MTOI. Here
correct.
also, I'm bringing in MTOI with this specific illustration in mind.
Okay, perfect. Thank you, Sunil Bhai. Miss Pooja Bhatt, I think there's a lot to do on RCM. Maybe Sunil Bhai, we can just do one session on RCM. As per the latest GST guidelines, what percentage of GST is payable under the reverse charge mechanism on import freight in cases where the freight is prepaid by the overseas agent and a debit note is given to the freight forwarder in India to collect the freight charge from the consignee and remitted back to the freight forward, to the overseas agent. Miss Pooja, over here in this particular case, when you have split your question into two, because you are saying that collects the freight charges from the Indian freight forwarder or the consignee. There are two different aspects to this because there are two different jobs being performed. We will take up the latter part of your question, is that if this is a freehand cargo coming to India and your job is that of a break bulk activity where you are collecting the freight on behalf of your overseas agent, and you have to remit the entire debit note amount that you have collected from the consignee to the overseas agent, then Sunil Bhai, what percentage of GST is payable under the reverse charge
It
mechanism?
would be 5% for ocean, 18% for, of
Okay.
course, import would be free, but otherwise it will be 5%.
All right. If the air import, so if an ex-works shipment is handled by an Indian freight forwarder on behalf of an Indian importer, then Miss Amita Mishra is asking whether it is taxable. So it's taxable, right? We all charge
Yes, yes.
18% and 5% on the freight. Mr.
No, but air
somebody,
import है तो वो भी 18 हो जाएगा ना?
correct. Correct. Only on the freight we don't charge, but we charge on the X-Works excluding, and we charge on the X-Works. We always
Yes.
do that. Tricom Logistics is asking, we are a registered MTO. We negotiate freight rate with shipping line at origin, offer the same freight rate to the destination partner, plus our profit share or handling fee. We make a master and house BL as freight collect and charge them a profit share or a handling fee to the partner under the heading of freight. Is this amount chargeable to GST because these are FOB shipments from India?
Just to simplify the entire thought process, what you are saying is you are collecting freight from your destination partner and paying it to a shipping line in India.
So in this particular case, it can be two ways. I am presuming that this is related to imports or when they are negotiating export freight rate from their destination agent. But in this case, somebody from Tricom Logistics, if you can please clarify ASAP to us, are you looking at imports or are you looking at exports? Because in this particular case, we are going to consider this as an import shipment and give you a solution or a reply for
No,
that.
he says it's exports. He does say it's export because he's saying FOB shipments from
Yeah,
India.
so then it is exports.
So, but what I'm trying to ask is, if it's an export shipment, I understand that this MTO is paying a shipping line and then collecting it from its destination partner. Is it as simple as that?
Yes,
No,
so
Or
that
is there
means
something
it's like a
it's a FOB
nomination.
shipment. The freight is collected at the destination only by the counter agents.
Yes,
Acha.
and the counter agent then pays you back that freight collected by you.
Yeah.
So when the counter agent gives you the freight, which will be treated as an export of service, you will need FIRCs for that, and there will be no GST on that.
Okay,
Chaitanya,
thank
can you
you.
hear me now?
Yes, Rama sir,
Thank you so
crystal
much.
clear.
My system has troubled me like a GST.
Welcome to our world, Rama sir.
Thank you so much. The two things I must compliment the entire team for having brought in Sunil Bhai. It's been fantastic. I can appreciate more because I'm a practicing GSP. So I have on the freight, on the X works, you have clarified. But on the pure agent, I have an issue about the GST authorities when they audit. The pure agent is being taxed at the recipient end for whatever reason it is. Though it is a reimbursable expenses and everything is in their name, still the large clients deduct tax. Now, when the GST comes for an audit, when they ask us to reconcile with the return statement with the turnover and the GST, they invariably there is a difference in the taxation. How do we tackle this?
This, I think, one of the participants did ask this query, and this is a genuine challenge because, as far as the GST authorities are concerned, for them, they treat income tax as sacrosanct. And if there is a mismatch between accounting or income tax records and GST records, definitely they are going to pinpoint into detailing. We might have legal answers, as you rightly said, that there is a reimbursement claim, there is a rule which tells that there is no tax on reimbursement. But the mindset of the officers clearly is to, not believe what you say. There's a fundamental element of mistrust existing, and that trust deficit results in show cause notices. We have seen clients who will share lots and lots of documentation. In some of our clients, we've even shared around 10 to 12 box files of documents to prove the pure agent claim. Despite that, officers will say that no documents have been submitted, and then you are at the mercy of higher forums, the tribunals and the like, to really take out that demand. So this is a practical pain point which does exist. Honestly, except for saying that make sure that as much documentation you can make, you try to ensure that you have that in place. Otherwise, it's a problem which does exist in the because and primarily it comes out of the trust deficit more than.
Okay. Will that not affect the recipient per se? Can they deduct tax on their own bills?
See, uh, again, as far as the recipient's TDS position is concerned, there that's again an area of gray. And most of the organizations, especially the corporates, want to play very safe on that front. And they would say that we don't want to go into any controversy because non-deduction of TDS results in there are also situations of prosecution under the income tax law.
Yes.
And therefore most of the corporates want to be safe rather than sorry. So even if you want to go and tell them that please don't deduct TDS, it's going to fall on deaf ears to most of the corporates.
Thank you so much.
You are on mute.
I think I must compliment you, Sunil Bhai, for being explaining this in a very simple manner to people like us who do not understand law much, but at the same time we want to compete in this world of GST, income tax, and other taxes. I think you have been wonderful explaining this thing. Going forward, there will be many other things you would be explaining. I think we need uh, uh, such clarifications. Of course, a lot of people have asked for a notification. Is all right, but such a clarification will be extremely useful for us. Thank you so much.
Yeah.
Thank you,
Can I
Rama
check
sir.
on?
Sorry, Sunil bhai. Sorry, Rama sir. You were
Yeah.
saying.
No, I only wanted to thank him, but rest I
No,
leave
that
it to
was
you.
Thanksgiving almost like.
Okay, Shankar Bhau, you have a question?
Yeah,
You have a
just a question which
query?
which just came out of the discussions only. But first of all, let me compliment and thanks Sunilji for the wonderful session. It's such a complex issue. It's not that within a session of 1.5 hours we'll get the whole concept clear and everything, because we have to start from the principle, from the basic of principles and agents and associates. From that level we have to start to understand the GST perspective. But nevertheless, the one thing which came out today was something new for even me also with regard to epidemics and IPDMS. We have been only hearing for importers and exporters. But this really came out news for us as a freight forwarder also. We have to start following this EPDMS system and uploading the invoices on the system website. I don't know whether it will be with AD only, authorized dealer. But when you're talking about the net off of all these containers, sorry, net off of the amount, because we have various amounts which are involved, like different like haulage, freight, ocean freight, and there are different RCMs applicable for that also. So under the RCM, it is maybe 5% only. But is it allowed to net off and then only for the balance amounts we have to pay the RCM, and that makes the that takes care of the whole set of net of charges under the GST?
No, I was not very clear of the question. What you are saying is whether netting off is permitted or not. Is that the question?
So what I will say, see, we are having invoices on purchase and sale, both invoices with the foreign agents, right?
Yes.
Now, 100 rupees you said it is payable and 60 rupees is receivable, and then it is 40 rupees what against which we have to make the payment. And the point of taxation is at time of payment. So is that 40 rupee, $40 tax which are paying is allowed, or we have to show that 100 rupees is equal to
Yes.
so
So
much
I
of?
think that was the first facet. Again, I'll repeat because this is very, very critical. You have an import freight bill of 100. You have an export freight bill of 60. And you are netting it off and making a remittance of 40 to your counterpart. In this example, your RCM triggers on 100, not on 40. And I am aware that there are many fraud forwarders who are actually paying only on 40, which is a substantial non-compliance, I would say. Because at some point of time, if the officer comes around and navigates this slightly in detail, and he will see the annexure of your counterpart, he will find all these pluses and minuses. आपने नेट डेबिट नोट लिया है, कुछ लोग तो नेट डेबिट नोट एक लेते हैं 40 का, कुछ लोग दोनों डेबिट नोट लेते हैं और नेट ऑफ सिर्फ पेमेंट में करते हैं. But quite a lot of people take one debit note for the net amount for the entire month or period, and there's an annexure which has all the pluses and minuses of profit shares.
So that's
Yeah.
again a understand and make.
Sorry, Shankar Bhau, you're not clear. Shankar Bhau, you're not clear.
Go ahead, go ahead.
There's
Nah.
an echo. There's some echo in what
तुमचा
you are.
echo येत आहे, Shankar Bhau. You
No,
were better
in
with your earphone on.
in
Earpod.
form A2, which we give it to the bank, which is certified by the chartered accountant, we give the both debit and credit. I mean, by that way that we keep the document of it and we can show this is what the net off is. But the precaution and the caution is good that we both end we pay whatever is due and whatever received separately. It is less cumbersome.
Shankar Bhau,
Okay,
can we proceed? Sorry. Yes, please go ahead. Shankar Bhau.
no, it's okay. Since this was the thing, and then I think so we should have the clarity like sales should be treated separately, purchase should be treated separately, and netting off should be done by itself rather than just depending upon the netting off and whatever is due, we make the payment and on that we pay the tax. That is how we are doing the practice. I think so we should get some good practices in our system, so that will become a trade practice across.
Okay. Thank you. May I? continue? Shankar Babu, can I continue with the rest of the questions? Okay. Sunil Bhai, we have an interesting question that has come from, one second, that has come from PDP International. They are asking what are the common GST audit objections for logistics and freight forwarding companies?
So again, some of the very common industry issues are principal to principal versus principal to agent. Second is the RCM tax liability, which also we've discussed in reasonable detail today. Third is denial of export benefit on some frivolous grounds at various points of time. In some cases, there is a denial for 5% benefit and they are demanding 12, 18%. Or in some cases, even air import, which is exempted, they are denying that exemption. So these are, I think, some of the commonplace issues which come in.
Thank you. We have one question from, again, PDP International. In console shipments, whether reimbursement of airline charges and handling charges should be taxed separately or as a composite supply?
Sorry, I just missed that question. Sorry.
So for an import console shipment, whether reimbursement of the airline charges and handling charges should be taxed separately or as a composite supply?
As I said, the industry itself is dividing this into separate baskets. So if you are going to do a composite thing, you will end up in a inverted structure. And therefore, it's preferable that you have separate line levels itself.
All right. Royal Forwarders is asking, what is the ideal GST structure for a freight forwarding company to stay compliant and tax efficient?
I think very generic question to answer.
No worries.
Typically you'll have to look at each transaction, look at the documentation, and apply the principles of 5 versus 18 correctly. I think this is what, because it's too generic a question for me to.
Fair enough. So Royal Forwarders, if you are here with us today, if somebody, whoever is attending, if you can send us a specific question, we will go ahead to do it. Bhavesh Bhaskar is asking, as a freight forwarder acting on the principal agent basis, when they are raising an invoice to the foreign principal for reimbursement, shall they charge IGST or raise the invoice under bill of supply?
No, so bill of supply doesn't work here. Bill of supply is only for exempted shipments. And this is again, I can take a minute because this is a slightly commonplace error which many organizations are doing. Bill of supply is when you make an exempted supply. In your industry, it is only for air import freight that you can have a bill of supply. There is no other transaction where you will have a bill of supply. Organizations do bill of supply for reimbursement, which is incorrect. Ideally, you should just do an invoice or a statement of account for the reimbursement component. For exports, also many people do bill of supply, which is also incorrect. Your question was about an export. If it's an export of services done by you, you should raise a normal tax invoice with the IRN and not a bill of supply.
Okay, thank you. This is from Mr. Jayesh Jain. Shipping company has raised an invoice for export ocean freight to an Indian freight forwarder, to an Indian company. Company raises invoice for ocean freight to the actual customer in India. That means the shipper. Service invoice received from local agent with IGST. Can they claim IGST since our revenue was charged as GST exempt?
Just 1 second, Chaitali. I need just
Haji. Yeah.
Yeah. Okay. Yeah, tell me. Sorry.
So according to Mr. Jayesh Jain, shipping company raised invoice for ocean freight export to company, presuming the Indian company. The Indian company in return has raised invoice on the Indian exporter. Service invoice from local agent with IGST has been received. Can they claim this IGST since their revenue was charged as GST exempt?
Why is the revenue GST exempt?
Mr. Jayesh Jain, Can you please respond on this, or please send us a separate email and we will send it off to Sunil Bhai's office and they will revert back separately on this.
Because
Mr.
ocean
Suresh.
freight is not exempted, so there was no need for him to treat it as exempted.
Okay. Mr. Jayesh Jain, if you can do that. Mr. Suresh Babu, this has already been replied to in the earlier question. So we go back to that. Ms. Pooja, this has already been taken care of. Mr. Sitaram, all of this has been done. Mr. Gokul, I think we have had high. Okay. This is an interesting one. Mr. Gokul has come back. High sea sales. How will it affect the GST on exporter and freight forwarder?
So as far as freight forwarder is concerned, the principles are the same.
Yes.
Whatever freight you receive, you will examine whether it's from an Indian party or a foreign party. If it is from an Indian party, you will charge GST at 5%. If it is to a foreign party, you will claim export benefit against an LUT. Whatever the carrier is charging you, they will continue to charge you and you will claim ITC. If the carrier is overseas or the foreign counterpart is paying the freight and is reimbursing, taking it as a reimbursement, you will pay RCM and claim ITC. So for freight forwarder, whether it's a full-fledged export, import, or a high seas transaction, answers don't change at all. As far as the importer is concerned, high seas import is excluded from GST. There is no tax applicable. The final importer will pay IGST at the time of importation through customs. So that is where the change is. For the import of the taxation is different.
Thank you, Sunil Bhai. Tricom Logistics has a question. As we issue our MTO House BL, we act as a principal here. Hence, can we consider our profit share as portion of the ocean freight?
Yes, we have my entire advices throughout the discussion today are on the principle that it's a principal to principal relationship, and the payments that you make or receive from foreign counterparts are in the nature of freight and not in the nature of commission.
Okay. Mr. Atul Deshpande is asking, place of supply of service. Department invokes section 13(3)(a) to deny refund. The recipient is the foreign customer who does not make the goods physically available to the freight forwarder. Mr. Atul, can you please explain a little bit more on this? When you are talking about the foreign customer, are you talking about your agent? Are you talking about a direct buyer? And what exactly is it that you are asking? Please send us an email and we'll take this up with Sunil Bhai separately. Mr. Nilesh Sawant, we've already answered questions on Xworks on DDU, DDP. So I hope this has been taken, and when we handle transportation and all, we can do this done. Mr. Rajesh Menon we've already replied to this, Sunil Bhai. Billing to overseas customer is exempted from GST. So we've replied on that. Mr. Saurabh Mehta has, in a situation where reimbursement charges have been inadvertently reported as non-GST supplies in GSTR1 and consequently input tax credit has been reversed under Rule 42 in GSTR 3B for the same period, guidance is sought on the appropriate rectification process. Specifically, clarification is required on whether such an error can be corrected through subsequent returns and whether disclosure or adjustment in the annual return GSTR 9 would be sufficient for rectification.
Okay, so I think the major consequence is the Rule 42 reversal, which has already been done. As principles, because again, this is something very confusing. As principle, let all of us understand that GSTR 9 cannot create or reverse a tax liability. So if you have already reversed ITC, then your electronic credit ledger has already been reduced. That electronic credit ledger reduction cannot be reversed through GSTR 9. It will be through a separate process of reclaim in your GSTR 3B only. And there are timelines for it. For any financial year, you can reclaim the reversed credit only up to the November of the next year. So if you are within that timeline, you can rectify the situation by reclaiming the reversed input tax credit in the subsequent months 3B, not in GSTR.
Thank you very much. Mr. Anirudh Daga is asking, export freight, which is billed to the foreign agent under LUT, sometimes when we receive the inward remittance, Forex is received by another Indian bank who thereafter sends NEFT in INR to our banker. In such a case, how to safeguard ourselves as we don't get an FIRC even though we have a proper TT copy from a foreign agent? Is that something that you would like to answer now, Sunil Bhai?
Yes, yes. I think this is again a very commonplace challenge which exporters face. There are correspondent banks, and I assume this is a case where the money came from abroad into a correspondent bank, who in turn gave it to the bank account of the particular freight forwarder. If we go into the technicalities of it, you are entitled for an FIRC. But because the foreign currency came to a correspondent bank with whom you don't have a banking relationship, it becomes administratively difficult for you to get it directly. You have to approach through your banker, and your banker has to approach to the correspondent bank. And honestly, everybody is busy in their own lives. Nobody wants to, take that extra effort until they are really pushed to. So the simple answer is you are entitled for FIRC. You will have to chase your banker as well as the correspondent banker. In the past, our clients have faced these issues. They have had to chase these banks for around 4 5 months or 6 months and run pillar to post. But at the end, they were able to get an FIRC. So it's only that there will be because of this special situation of two banks involved, you'll have to do that paperwork and legwork of running around.
Thank you. Mr. Gokul has come back. Airlines and shipping lines are charging 5% to the agent, which the agent is passing on to the customers. But he claims that the GST department is asking query why you are not charging 18% to the customer and is asking a reason for the same. And rightfully, the customer is not paying them at 18% because they are aware that the airlines or the shipping lines are charging at 5%, which technically it's the shipping line and the liners. So he needs to know how to respond to the department on this.
No, so basically there are different reasons, and I tried to cover quite a lot of them in my presentation.
Yes.
3 or 4 reasons which the department broadly tries to say revolve around the P2A relationship rather than P2P relationship. They want to say that it's only the performing carrier who can claim the freight benefit. Everybody else is not entitled for the freight benefit. Now, necessarily, this is a litigation which one will have to fight it. There will be a need for the documentation. In 2 3 slides, I have explained in detail different parameters of documentation which will be required. And I think basis that the freight forwarder will have to litigate and fight it out.
Thank you. Sunil Bhai, we have a question. PPT we are going to share. Mr. Sailesh is asking for the new GST amendment table. Can we get that from your office and we can share?
It's a part of that PPT. There is a
It's a
chart which
part
I'm
of the
saying.
PPT, na?
Yes,
Okay,
there
done.
is a table. I spent quite a lot of time in that.
Okay, done. I'll share that PPT. We'll share that PPT with everyone. So there is no problem. The next question is, Mr. Anthony Fernandez is asking, we need to raise a sales invoice to the consignee overseas in USD. However, the CFS charges which are billed are in INR that they have paid on the consignee's behalf or the agent's behalf, but are in the Indian shipper's name. In this case, can we raise a separate reimbursement bill to the consignee overseas?
So you are saying the reimbursement is in the name of the Indian freight forwarder.
So what happens is that when we do ex-works shipments or when we are doing the export shipments, in this particular case, what Mr. Anthony Fernandez is trying to say is that they have received a nomination shipment on ex-works basis from the overseas agent or could be a direct importer. Now, when the CFS charges are being paid over here locally, the CFS has raised an invoice not on Mr. Anthony's company's name, but on the Indian exporter's name. So he wants to know that can they raise a separate reimbursement bill in US dollars to the overseas agent for the same amount?
No.
They
There is a
cannot,
problem.
no?
This is not a reimbursement. This is a
Yes,
part of your scope of work itself.
correct.
So technically, it is an export for you. That's fine. but it is still a part of your charges to the foreign company. And as far as the third party raising the CFS raising invoice, ideally they should have raised invoice in the name of the freight forwarder, in which case you would have got input credit. But since they have raised it in the name of some third party, it will not appear in your portal and you will not get credits.
Correct. So when we do clearances for our clients, we get the CFS to raise invoices on our names so that we can then claim it.
Yes.
And since Mr. Anthony their company must be getting it on the shipper's name, if they want to claim it, then they need to get the CFS invoices on their name. Correct? If it's an
Yes,
export
exactly.
shipment. All right. Mr. Sachin Narkar is asking, what is the interest rate for non-declaration of RCM on foreign payment?
18% per annum.
Okay, that kind answers that. And Mr. Atul Deshpande, I think we've already answered this question. Sunil Bhai, he is asking, in cases where freight is payable to the shipping line on collect basis and freight receivable is also on collect basis, the destination agent or partner pays the difference, which is billed by the freight forwarder as a profit share or a handling charge. Is this an exempt supply?
There is no exempt supply in this transaction at all, firstly. But if I am not mistaken, are we looking at an example where the freight is paid from overseas and received overseas, and only the difference comes into India? Is
So
that the question?
in case where freight payable to shipping line is on a collect, so I presume that they have done a contract with they've done a booking with the shipping line where the freight is going to be paid by the overseas agent. They are not paying freight in India, and if they are receiving freight is also collect the destination. Mr. Atul, can we, for the paucity of time, because we still have a lot more questions, can you please send it to us, and I ensure you that we'll get a reply from Sunil Bhai's office on this. Thank you very much on this. Surekha Jadhav is asking, foreign clients are exempt from GST on freight and other charges. However, if the same invoice includes a profit share component, will GST be applicable on it or not?
So as I said, profit share, there has been an interpretation of whether it constitutes intermediary or not. However, all that controversies for the past period, from April 26 onwards, this would be an exempt export of service, not an exempt supply. It's an export of service.
All right, thank you. Mr. Anant, we are sharing the PPT tomorrow. It will go out both from BCBA as well as Triple FAI. And Sunil Bhai has already confirmed that the new GST amendment table sheet is in the PPT. If you still have a doubt, please do get in touch with us. Thank you very much for it. And I think with that, Sunil Bhai, we've come to an end of the questions. We have genuinely answered. Honestly, we've answered more than 50 questions. So thank you, Sunil Bhai, on this. To everybody who may still have questions, please do send it to us. We assure you that we will send it to Sunil Bhai's office and they will try and respond as quickly as possible. And with this, we come to an end of our session, Sunil Bhai. Before we do a vote of thanks, we have a lot of our office bearers and managing committee members, both from Triple FAI as well as BCBA, who are present here. And I'm sure they would like to say a few words. So may I start off with our Senior Vice President, Paresh Bhai from BCBA. Paresh Bhai, are you there? Moving on, Sudhir Bhai. He's our Vice President for Triple FAI. Sudhir Bhai.
Yeah, thank you, Chaitali. Quite a session it is. I'm telling you, GST is such a issue which touches us every day in every transaction. So howsoever number of webinars we can have on this issue, I think it is going to solve some or the other problem for some or the other custom broker. So I think it's a quite a welcome move on your part when you decided that we can have these sessions and that too, in continuity. Maybe we will have in once, I think, in alternate month. And what I can say, I can thank Mr. Sunil Gabawala for such a enlightenment he had given us on various aspects of freight forwarding. There were so many, I think, issues which were common to us and they needed some kind of the clarification. I think the entire 2 hour webinar has 80% of the common issues have been sorted out, and he has been very, very proactive in saying what is the way we should do it. So I'm thankful to Sunil ji for such a wonderful session, and I definitely look forward towards many such in times to come. And thank you, Chetali, for coordinating. And I think it will be, something which will remember for a very long, long time. Thank you very much.
Thank you, Sudhir bhai.
Thank you.
Paresh bhai, are you there? Ketan bhai? Rajesh ji?
Yes, yes, I'm there.
Yes.
Thank you, Chetali. And
Welcome.
I must sincerely thank to our keynote speaker today, Mr. Gabawala, for his such an insightful and informative session on the complex subject of GST. We have already been really facing many, many issues related to this. One thing which I've really been able to understand today is though the issues we all face as freight forwarders are very common, but the problems come up with the kind of invoicing we do, the kind of treatment we do with the line entries. So which has been with the experience of Mr. Gawawala, he has really explained it so well, enhanced our understanding on this complex subject. Really thankful for him. And I must also compliment my heartfelt appreciation to all the organizing team led by Chetali under the BCBA and the AAA flags. Thank you so much for your dedicated hard work and bringing this such a valuable information to all the members. Really commendable. Thank you once again to everyone involved and making this session very insightful and engaging. Thank you.
Thank you, Rajesh ji. Thank you. Ketan bhai, Ganpat bhau, Sunil ji, Paresh bhai. Tej, would you like to say? Tej is our honorary joint secretary for BCBA, along with being the chairman of IIFF, which is our education division, Sunil bhai, in FAI. Tej?
Thank you very much, Chetali. Sunil bhai, what a session. I mean, 50 questions to answer itself is a feat by itself, and doing it after a presentation, amazing. As Sudhir ji, Rajesh ji, Shankar bhai, everybody have said, GST is a burning issue. Rama sir, I think, put it, very aptly, saying that technology is giving him as much as trouble as GST. Rama sir, you should have just called me. Just joking. Just joking. Sunil ji, I have gone through a GST audit just recently, and it can be troublesome no matter how many plugs you try and ensure that water doesn't leak, but you find leakages. It's like a ship that's sinking. Every hole you put your finger in, and somewhere else another hole comes out. It's people like you who will keep us safe. We have burning issues, and we will continue to try and put our representations to the government. One thing I have, I must share that the department is at least listening, and to a certain extent they are understanding. I agree with you, performing carrier and contractual carrier, that is a point of 5 and 15%, 18% that they've taken. I think that's it started off with GST rider, and it is now spreading. That's going to be, unearthing the whole service tax issues that were settled. Friends, GST is a really important topic, and it is shining stars like Sunil ji will show us the way. Please pay attention to compliance. There is no excuse. Even if you are ready to pay the tax later on, the problem is the interest and penalty which will burn not a hole, a burning hole through your pocket. Thank you very much, Chaitali, for giving me the opportunity.
Thank you, Tej. Ketan bhai, and then Ganpat bhau. Tumhala.
Thank you. Thank you, Chaitali. Thank you, Sunilji. It is a really wonderful session. I have seen that how many questions and how many people are asking the question. many questions in mind. But to reply, whatever reply you, Chaitali, you and Sunilji given the reply for the questions, what is in our mind, members' mind, really wonderful. And thank you, Sunilji, for the wonderful session. And maybe we'll require, if required, we can again call them and we'll check for that there. So thank you, Chaitali. Thank you, Sunilji.
Thank you, Ganpat Bhau. Thank you. And with this, we come to an end of our session. May I please request Dr. Neerav Thakkar, our Honorary Secretary as well as Honorary Treasurer, to please do the vote of thanks.
Thank you, Chaitali. Good evening to all the panelists and participants connected today on this marathon session. It's my proud privilege that on behalf of Federation of Freight Forwarders Associations in India and Brihan Mumbai Custom Brokers Association to propose this vote of thanks for this highly enriching session, the Decoding GST for the logistics industry. At the outset, I extend our deepest gratitude to our eminent speaker, Mr. Sunil Dabawala, for an exceptionally insightful and illuminating address. Sir, your profound knowledge and nuanced understanding of this topic, particularly for the logistics and custom broking sector freight forwarding fraternity, has greatly benefited all of us who are present here today. And the clarity with which you have articulated the complex provisions and practical challenges, and as well as addressed these 50, 56, 58, 60, how many questions with such a simple and to the point responses is truly commendable. I take this opportunity to convey a sincere appreciation to Mr. Amit Kamath, the chairman of Triple FAI, for his visionary leadership and for consistently championing such knowledge oriented initiatives that enhance the professional capabilities of our fraternity. And my heartfelt thanks also goes out to Mr. Sanjeev Harale, President of BCBA, for his steadfast support, fostering this collaborative endeavor, which stands as a testament to the collective strength and commitment for our associations and keeping the interest of custom brokers first. We are deeply grateful to Ms. Chaitali Mehta for conceptualizing and curating this important series, addressing critical contemporary issues faced by our industry. So, a lot of research which went into this. Frankly, this is the beginning of a new series, as she mentioned, but it's actually the first of its kind for our industry. So, thank you for this wonderful initiative and so wonderfully moderating this entire session of so many questions and handling it. Really amazing. My sincere thanks to also is due to all the office bearers, advisors for being part of the panel and sharing their insightful thoughts, as well as the Federation of Freight Forwarders Association, EC members, Brihan Mumbai Custom Brokers Association, Managing Committee members for spreading the word and making this successful with more than 200 attendees. So the dedicated secretariat teams of both the association and federation who meticulously planned and put their tireless efforts for this seamless conducting this webinar. And under the guidance of office bearer in charge, Mr. Sudhir Agarwal, and our honorary secretary of Triple FA, Mr. Sudeep De, for overseeing this session and ensuring seamless coordination, although he's tied up with many other commitments. And finally, I would like to express our appreciation to all you participants for your gracious presence and active engagement, which has truly added value to this session. And with this, we conclude today's webinar and we look forward to your continuous participation for all the forthcoming sessions of the GST Catalyst series. Thank you once again.
Thank you.
Thank you, Neerav. Shankar Bhau, तुम्हाला काय सांगा? Would you like to say something? Okay, done. Sunil Bhai, thank you very much. I think maybe, I don't think the GST series is ever going to wrap up, but maybe in between, we can just do one session on a Q&A where people will just come up with their questions because there are so many of them. And actually, I counted, we've done more than 60 questions. So thank you very much, Sunil Bhai, for spending so much of time. And we
Chaitali,
look
I just
forward.
want to say one thing, how many of us has missed the opportunity for not listening to Sunilji today, 3 hours for such a eminent person who is so busy and so knowledgeable in GST has given us this time. It is really valuable time given to our organization, both Triple FAI and BCBA. Totally heartfelt thanks to Sunil ji for this.
Thank you, Sudhir ji.
Thank you, Sunil Bhai, for everything. And we look forward. Sunil Bhai unfortunately can't give us time every month because of his busy schedule, but he is going to give us time every alternate month. And Sunil Bhai, we are absolutely indebted with that. We look
Thank you.
forward to your next session in June, and I'll be in touch with Aman and we'll finalize that then.
Sure.
Thank
But
you once.
meantime, if Sunil bhai can share us some details on GST updates, we can have it circulated to all our members if they have the article or something like that. Yeah, that will help out to keep up
That
updated with
presentation
all
I
the
have
changes
shared, so that
come.
can be shared to the members.
Yeah, other than presentation, regular updates with the GST and how we should gear up with it, we will be happy to share among our members. Sir.
Sure, sure.
Sunil Bhai, we'll be in touch with you to see how we can take you on board. So I'll discuss and then we'll come back to you then.
Sure, no problem.
Thank you very much.
Thank you,
Thank you.
Chaitanya. Thank
A
you.
lot
Thank
of
you.
things you have clarified and helped us today, Sunil Bhai. Thank you
you.
very much on behalf of BCBA as well as Triple FAI. Truly
Thanks,
indebted.
Request one
Chaitanya.
article for a newsletter also, Chaitali.
હા સુનિલ ભાઈ તમને ટાઈમ હોય ત્યારે પ્લીઝ તમે લખી શકો અમારા ન્યૂઝલેટરની માટે તો
Sure.
Article
Share
one,
with us, na?
please. Thank you.
પ્લીઝ
We'll try.
Thank you.
We'll try.
Thank you,
Okay.
Sunil bhai.
Thank you.
Thank you.
Thank you.
Bye-bye. See you all.
Bye.
Thank you very
Bye-bye.
much. Bye-bye. See you all. Thank you everyone for staying back. Bye. See you.